Let me see. But this is an opportunity to share. Let's share the wealth. Let's share the information, right? This is an opportunity for growth, to ask questions, right? Be prepared, be ready. Be in the space that you're ready to receive this information. We're going to be covering some valuable information. Take notes. If you have any questions, write them down. So when the time comes and I bring my brother up, you're going to be ready to answer the questions. And let's see what we can do about answering those questions. You're in a safe space. There's no wrong question. We want to make sure that you get the right answers, though. Right? With that being said, listen, the brother, I'm welcoming him up to the space, man. I'm extremely excited. Over the last 4 years, I've learned how to develop a relationship, but we developed an interesting relationship by being on many calls and hearing about each other. And when I first got introduced to Shawn James, it was exciting. You know, I heard him over the phone. And then when I actually got to meet him out in Orlando at a mansion event, right, his energy matched what it looked like and sound like over a Zoom. And that's exciting. That was exciting to me. And then to find out that he's been in this business that we're in over the last 7 years, and it really has been hitting the charts and really trading. And he's made a significant amount of gains, right? No income claims, because, you know, again, past profits doesn't guarantee future results. So whoever's listening to this right now, his results are his results. And we can't wait to just hear what your results are. But this brother right here has been a phenomenal mentor. He's really helped pace me out because, again, he has 20 plus years of experience. He's a coat to grab on to. He's a great voice, a loving father and husband.
Yes.
I just want to welcome in this man of God, this man of immense faith, this man of immense conviction, this man of immense energy, and a man, most importantly, of immense value. Put yourself in a space, be prepared to receive, watch, listen, and learn. With that being said, I'm going to turn the call over to my brother, Mr. Shawn James. We want to welcome you, my brother.
Let's go.
Welcome. Let's
Wow,
light the chat up. Light the chat up.
Wow.
Honor you.
Wow.
We honor you. We are so grateful.
Man, thank you so much. Can y'all hear me okay?
Loud and clear.
Awesome, man. First of all, I gotta say, Dre and Shareem, that's my brother and sister. I love them to no end. They are phenomenal leaders. They are just great in this space. And I mean, their energy is just over the top, and I love it all the time. And I want to thank everybody who's on the call, because we're going to get to work today. I see my brother Jim on here. Man, let me tell you something. That guy is awesome when you get to know more about him, just him jumping into the jumping space. And of course, I have Tia on from the Bahamas. I wore this shirt because of her, because when I bought this shirt, it was when I went to the Bahamas to go visit her and her mom. So that's been an honor. So I definitely had to wear that shirt. And of course, I got Betsy, Satira, of course, Duran, and everybody. And of course, Elizabeth, homegirl, love it. So great, everybody. Alan, everybody. All right, so guys, let's go ahead and jump into this because for the sake of time, I know it's Thursday night, right before the Memorial weekend. And yeah, we're going to get right to work because that's why you came on. Let me go and share my screen. And let's get it. All right. So Bread Talk Investors markets training, that's what we're going to get into. So tonight we're going to analyze, we're going to trade, and I'm going to show you how to profit, and we're not holding anything back, okay? And so, all right, so what we're going to cover tonight, this is just brief. This is the only thing we're going to get into. Then we're going to start getting the charts. Tonight, we're going to talk about how to develop a daily plan to analyze and enter the market, okay? And then number 2, how to set up your Forex and crypto charts for success. Number 3, determine the type of trader you are and the time frames that you may want to go ahead and trade on. And so that could change. At one time, you could be deciding that you want to be on a short term, where you could be on a minute chart, maybe on a 3-minute, 5-minute. Maybe you like to be on a 15-minute, 30-minute. Maybe you want to be an hour. Maybe you want to be on a 4-hour. Maybe you want to be on a daily or weekly. Doesn't matter. I'm going to show you how to make money on all of those. I'm going to also show you how to keep it really simple. There's so much information out there. And I know a lot of you have been bombarded over the years and months just learning strategies, learning about Fibonacci, learning about all these other other tools out there. But really, guys, what I found is if we keep it really, really simple, I'm going to show you how to keep it simple to 2 pairs, 2 strategies, and 2 to 5% growth. Okay. And then the last thing is we want to track progress. And this is using your demo. I think we underutilize our demo account because I've heard all kinds of things. Oh, that's not real money. Oh, it doesn't really happen the same way. Well, that's just like saying, you know, we're playing sports and practice doesn't count. We just want to jump into a live game with no practice and we just want to start making points, not knowing how to make sure that the play is right, making sure that our energy is right, knowing what the coach is saying to us. So we don't want to move ignorantly because nobody wants to lose money. It feels terrible. It sucks. It demoralizes you. And we don't want that. We want everybody to start winning, and you don't have to lose hundreds of thousands of dollars to start winning. Okay. All right, so let's get into it. I'm going to show you, ladies and gentlemen, exactly what I have done over the last 7 years. Okay, I'm not holding anything back. I'm going to show you step by step exactly what I do to look at the market and how really I'm able to make, you know, significant amounts of money in the market and only spend maybe anywhere from 15 to 20 minutes in the market. Okay, I don't spend hours. I don't stare at the charts. I don't sit there, you know, spend all my time. No, I'm going to show you how to simply go in the market, take your piece of the pie, and go about your business. All right, that sound fair? Fantastic. All right, so first, let me go ahead. Let's see where we'll go to here. I'm going to go and show you our, let's close this. Hopefully you can see my screen. Let's go. All right. Let me reshare just in case you guys don't see. Do you guys see my currency strength meter? Yes, no, maybe so. Let me know if you do.
Yes.
Yes. Good. Fantastic. Let me refresh. Okay, for some of you, this is maybe new. For some other people, it's old. And I know someone like Jim. Jim has been an options trader, stock trading. These things kind of go parallel across, but today we are talking about the foreign exchange market. Why is it that we talk about that? Well, that's where I started and where most of us have kind of started because it kind of moves at a steady pace. Doesn't matter really what's happening in the stock market. You're going to make money in the Forex market because every country, every bank, every institution is constantly trading money on a regular basis. Okay, regardless of what happens in the stock market, they're trading money, and that's where we find that we can make very easy gains by doing that, understanding that. Okay, if you're not real versed in Forex, that's okay. Of course, being with the Bread Talk Investors, they have a phenomenal educational program that'll take you from the baby beginner to intermediate to advanced level of almost being a professional trader. Depends on where you want to take it. So they'll go over the ABC on what are pips and points and all that other stuff. But right now, we're just going to get right to the meat and potatoes of everything. So guys, what I do is I'm going to try to decide, first of all, if you don't know, there's about 4 significant markets that you can trade in the Forex market, okay? Obviously, we have the London session, okay, that goes on. We have the US session, we have the Sydney session, and we have the Aussie Australian session, okay? And so here's the thing. I have learned over time, I don't force myself to jump into a market that's not comfortable with the timing of my life. And what I mean is, if you don't work third shift and you don't wake up at 2 or 3 or 4 in the morning because you have to work or because you're doing something else, then I don't trade that. Okay. I know we've heard that the London session obviously is one of the most profitable sessions, but understand that when you're trading money at any time of the day, there are transactions that's happening all over the world. There are over 1 million plus transactions that happen almost every minute of the day. All right. So there's no excuse that you can't trade in a certain market. The thing is that most people get addicted to I need to be fast, fast, fast. I need to be moving fast. Well, here's the thing. If I show you how to make $100,000 and the market moves slow, would you be interested? I'm sure most of you would say, yeah. The whole point is we just want to make sure that we understand the market so we can make money in the market. So whether you're on an Australian, a Sydney market, or whether you're on the Japanese market, I meant to say that you're in the Japanese market, the Asian market, it doesn't matter. find the time that works for you. So a lot of you have been bending over backwards to try to find the right time. So here's, for instance, if you get off at work, you work a 9 to 5 job, or you get off at 6, go eat dinner, spend time with your family. And you may say, well, 8 o'clock to 9 o'clock before I go to bed, or 9 to 10 is my time. You need to find out what session that is, and you need to study and trade that session, because I promise you, you'll make money in that session. You know why? Because somewhere around the world, people are making money trading those currencies. Okay, so there's no need to do what everybody else is doing. For me, okay, I'm up in the morning. For me, it was very convenient to trade at between 8 to 10 in the morning, because I didn't really start my day until after 10 o'clock. 8 o'clock, I would get up, usually between 6 and 7, I go work out at the gym. 8 o'clock is a really good starting point. So guess what? I found out what works for Shawn at 8 o'clock in the morning. And that's what I started concentrating on. And that's how I started making my gains. Okay. So that's the first thing, is find out the time period of your lifestyle that fits, because I promise you, there's a few pairs that are moving and making money at that time. It may not move as fast as in your mind you think it's moving, but I promise you it's moving. And all you need is a few pips at a time to make a few $1,000s. Okay. Imagine, and I'm going to just set this up so mentally I can prepare you. Let's say you started with an account that was $5,000. Okay. And you're moving where you're making $10 per pip. Okay. That means for every move in the market, instead of a point in the market, in Forex, we use pips. So we assign a dollar value according to what we have in our account. So if I have $5,000, I want to grow my account by a few $100s every time I get in the market. Well, that means if I'm doing $10 per pip, I move 50 pips, $500. That's it. Or what did I say? $10. Yeah. So that'd be $500. Okay. I only need to do that a few times. How many of you would be happy if you could make $500 a day in the market? I don't have everybody's pictures up, but I'm gonna kind of expand it so I can see your faces if you're out there. Yeah, let me know who would be. Raise your hand if you could make $500 in a day, obviously, right? And you say, man, Shawn, if I could just do that. You can do that, okay? But we just got to set you up for success and minimize the risk as much as possible, okay? So, all right, enough chatting on there. So how do we do that? First of all, how do I determine in my session, what am I going to trade? Okay, I let the market tell me. I let the strength of the buyers and sellers tell me. To understand trading, you got to understand the bottom line is how you make money in Forex and trading is either the market is going in an uptrend or it's going in a downtrend, or it's going to be going straight across. If it's going straight across, we have as many buyers and sellers in the market. So it's almost in a neutral zone. And so what we're doing is we're waiting for the market to break out to make a decision. And that's when people get happy and emotional about something in the market that motivates them to want to buy more or motivates them to want to sell more. Well, what will do that? Well, market conditions. And we're going to show you how can you foretell the market conditions in a way so that you can make smart decisions as far as what you're going to trade in the market. So we're going to go step by step. All right. And so first, I'm going to look at the strength of certain pairs, and I'm going to compare that to a very weak currency in the market. So, and this is basic for a lot of you, but I kind of want to slow it down so that people kind of get it. So let's look at here. All right. So what I'm looking for in this, if you can see that, let me minimize that. Okay. So what we have, hopefully you guys can see my marker. There you go. When something is at a maximum level of strength, you're going to see 1, 2, 3, 4, 5. You're going to see about 6 bars here. It's going to be a lighter green. That means it's real strong. I want to take something really strong and go against something weak, because what that's going to tell me is that we're clearly in a trend. That's the first step of the puzzle to let me know, well, where should I be spending my time? A lot of you are all over the place trying to catch, oh, this looks good. Let me jump here. Oh, this looks good. Let me do here. Oh, let me do this. Or some of you are stuck on the same pair saying, come on, gold, 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 gold. All I trade is gold. And that's fine. You just got to understand how gold moves. Okay. And so nothing wrong with that, but you're leaving a lot of opportunities on the table because gold, because it's erratic and it kind of moves, you can understand it, but it's going to take a different skill level to do that. But if we can keep it really simple, and again, if I can get you to make 5, 10, 20 pips in the market, and you could do it with as less stress as possible, with as less guessing and as minimal risk as possible, you would do that. And that's where I want to put you today. So by the end of this call, you will be mentally prepared to find very minimal risk trades to jump into, okay? So we're at 8 o'clock during the day. So we're here in the Japanese session. We're also going, I believe, heading toward the Aussie section. So that means I really shouldn't be looking at a bunch of pairs that are in the US time frame, because that time frame is from 8 a.m. to 5 p.m. Okay, that's what we're doing, because a lot of us are forcing pairs into something that's not moving, that's not really beneficial to us. Okay, you want to concentrate on the time frame. So I'm really looking at a lot of stuff that's that goes with the JPY. All right, because that's the time of day that we're in. Okay, I'm not going to look for something that's not in that time frame. So, and plus I'm here in the Aussie section, the Sydney session, right? So I'm going to look at something that goes with the JPY. Maybe I'll look at NZD and maybe a euro. Okay, maybe I'll look at Swiss franc, and I'll look at AUD. Okay, it's not really high, but the reason we got to understand, what is the reason, Shawn, that I don't have a lot of bars? It's not necessarily because it's not just strong, but the momentum isn't as great as in the US market, and that's okay. That doesn't mean that there's still not a trend going on. Okay, so if we look at, and if someone has some paper, I want you to write AUD CHF. All right, we're going to mark those down. We're going to look at the JPY and look at something like an NZD JPY. We'll look at that, even though they're the same strength. We'll look at something like Euro JPY, EJ. We'll look at that. AUD JPY. We'll look at that. So these are just some ideas. Are they going to be perfect? We're not here for perfect. We're looking for opportunities, but we're looking for opportunities that's coming to us. Okay, so I already, kind of narrowed down some pairs that I want to look at. So I'm not all over the place. I'm looking at maybe 3 or 4 simple pairs. And really, remember I said the 2, 2, and 2, right? I'm going to look at, out of these maybe 3 or 4 pairs, I want to look at the best 2 that I could look at. The best 2 out of that, okay? So that's the first thing there. I'm going to my currency strength. And for those of you who don't have this, I'm going to put this in the chat as a link so that you can save it and have it. Let's get in the chat right there. So you just hit the little chat box on the bottom and you can copy that so you'll have it for your record, okay? The next part is, hopefully my screen is changed, and everybody see Forex Factory. Do you see that? Let me know if you do, if you don't. Forex Factory, do we see that? No?
Yes.
Fantastic. Thank you for that. All right. So Forex Factory is the next piece that I'm looking at. This is going to tell me, well, what are these factors that's moving the market? What kind of news is out here to influence the market? So if you're not familiar with this, I'm going to open this and you'll see some folders. Okay. These folders are financial pieces of news that either someone in maybe the Secretary of Finance of a certain country, maybe it's the National Finance Director, maybe it's the Committee for Finance in that particular country that's coming out with some very important news. Well, guess what? That's going to affect the market, okay? So red means it's going to be high priority news, that most likely these are the type of folders that will move the market, all right? That'll cause some sort of motivation in the market where, let's say there's a certain housing interest rate that is lower than expected. Well, people will tend to kind of say, okay, well, I'm going to sell these futures. I'm going to sell these options. I'm going to sell these things because I'm thinking I'm maybe losing some of my money. I want to make some money, so I'm going to sell. Or maybe it's going to be a high or a very low unemployment rate where people feel really good about the market, so they tend to pour more money in the market. Well, that will influence the market, that currency, to maybe push up in a buy direction. Okay, so we look at that to give us an idea. We see the orange, that's going to be a little less moderate. We're going to see yellow. That means just slightly cautious, but you do want to have the gray because this tells us about unexpected things like holidays and special times that the market is closed. Why do we want to know that? Because that will let us know that maybe we may not want to dabble in that market for today because there's no real activity going on. So we don't want to be stuck in a trade, okay? And obviously underneath it tells us all the different types of news that we're getting privy to in all the pairs, okay? We're going to know about growth, inflation, employment, the central bank, bonds, housing, consumer surveys, business surveys and different speeches, because guess what, when Biden came out, or when President Trump comes out, he's talking about the economy, that speech will drastically influence the market. This is where we can find buy and sell opportunities, okay? And of course, miscellaneous stuff. So when I set this up, I'm going to click a red folder because I want the high priority news, and I'm going to click the gray one because I want to know when there's bank closings or special holidays or something like that that may influence it. You could put all, you're always good, even if you decide to do all of them, it doesn't matter. And then I'll apply my filter and then I'll close it up. And then what I get is I'll hit calendar, and on this particular day, it's going to show me what kind of news is happening. And then here, you know, if this is how you want to make your living, if a lot of you are dreaming, hey, I want to leave my job. Hey, I want to replace the income. Hey, I want to pay off all my debt. I want to do so. If you're going to take this serious, you got to start taking the initiative to learn the tools of your market. So just because there's a folder, that's great, but find out what the news is. Come over here and you want to select the detail, and guess what? It'll tell you exactly what type of news is this, okay? So why are we looking at the S&P Global here? Because it's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. Okay, and so even here, it tells you the forecast, right? Previously, it was at 47.3, as you see here. They forecasted it would come up to 47.9, but the actual on this date was 45.5. Okay, and so it's time for a May. It's at the end of the month, so they do a forecasting at the end of the month, and this will give a forecasting here to let you know. And so that right there may drive the market to for that particular currency. It may drive that market to push it in a buy or sell. All right, so that's the euro. See, this is everything about the euro, and so we see a lot of things going on here. So I could set up for today. So let's happen for today. Today is Thursday. So today we had USD news, okay, and it came out at 8:30 a.m. in the morning. Okay, so what I would do if I was trading in the morning, I either would probably wait until this news comes, because what it's going to do is when the news comes out, it's going to shake the market up. People, okay, let me break this down. Trading is just, or excuse me, the charts or the candles that we follow is just an emotional indicator of how people feel about their finances. That's all it is. Even though we put numbers and all these forecasts, it's really just information to tell you how people feel. That's really it. If I could follow my wife's behavior and I could put data points to it, well, in the morning, she's feeling at a number 3. She's at 3%, but in the evening time, she's at 10%. Then I take this over a 7-day period. Then I start realizing that emotionally, she's not a morning person. But in the afternoon, she is. How do I know this? Because the data points are telling me this. Well, this is the same for trading. All these things are data points that are on the chart of how people feel about their economy, how they feel about their currency. You're feeling good about the US dollar, people tend to spend more. Oh, I feel like, you know, we have taxes are coming down. So now I can take that money and buy that new car. I can take that money, buy a new house. I can go and get that Airbnb. And so now we see a lot of activity. We start seeing the dollar go up in value. And now every other currency that is weaker than the dollar, we know that if we trade that against something that is evident that is going up, then we know we have some evidence to follow. We're like, okay, odd USD. We know that USD is strong, odd is weak. This should be going down in a sell. So I know this. How? Because I can follow the information, I can follow the data points. And this is how we start having educated guesses of coming into the market. So USD already moved for today. All right, so it showed the news. So what happens is after the news comes out, what I want to do is I want to look at the market and see where it was prior to the news and where it ends up after the news. So prior to the news, let's say USD was already strong and then this news came out. Well, guess what? It catapults it even higher. Great. Okay, I could catch it while it's catapulting. That would be great. But I will wait probably about 30 minutes after the news comes out. And then I'm going to see, will it continue an uptrend because of the good news? Or is it going to, you know, level off? Okay, was that just a push in the market and then it's leveling off? These are things I'm going to look at. And this is why I want to narrow it down to a couple pairs, because as I get to learn these particular pairs, it's like a relationship. Once this particular news comes out, I see this sort of behavior in the market. Now I have a more educated guess as far as where I can maybe forecast the market goes. So that lets me know if every time at the end of the month when the prelim GDP comes out, that I'm looking at the market, and when this comes out, it's always pushing it up in a buy. Well, then guess what? When next month comes, what do I believe is probably going to happen? This is probably going to push up in a buy. So now I got some data points to start following. And this is how you start using the tools that are here in the market. So you want to use this right here. I'm going to put Forex Factory in here too, so you guys can use it. And look, guys, we have stuff on metals, we have stuff on energy and on crypto. All right. So if you want to use that for those things, I do. I glance in the morning because this is going to tell me where am I going to start paying attention to. So I have the currency strength meter to tell me that this certain currency is strong, this one is weak. So now I can start zeroing in. The news is going to start telling me, well, what should I be paying attention to? Okay, where will there be volatility in the market? Well, if I'm trading the London session here in the morning, see at 3:15, I got a lot of volatility now with the euro, because look at all these different pieces of news. And then look at 4:30, I got GBP. So I know that if I'm up in the morning, I'm going to trade something that's with the euro or something with the GBP. I know this. I just need to start looking at the data points and then start understanding, well, where is this pushing? Where is the trend? With all these news coming out, if it's positive, so let's look at these forecasts here. It looks like things have either maintained or they slightly improved. So most likely, if I were to look back, anything that traded with the euro, where the euro was probably strong because of these positive forecasts, let's say if it was a euro EJ, euro JPY, most likely the euro was strong and JPY was weak. So I can mostly anticipate this was probably in a very good buy. Probably. And that's just all looking at the data points. Well, Shawn, you're talking right now. Let's really find out. Let's compare that. Let's look at something like a euro JPY. This was Tuesday, so we can't look at Tuesday. Let's look at yesterday. This is 2:30. We had GBP. Let me see. Actual was 8.7. They forecasted 8.2. So it looks like, hey, the CPI was good. That's the consumer price index right there. BOE spoke. Okay, so we had that. There was just news with that. I'm going to say this is probably positive. So anything with the GBP, probably at 2 a.m. to 5:30 here in the morning, was probably in a buy. I'm going to say. So we'll look at something like GBP odd, or maybe we'll look at GJ, which is my favorite. Let's look at GJ on Wednesday. I'm going to pull up a chart now, and we're going to look. I'm just hypothetical right now. I'm just talking. All right. Can you guys see my trading view screen? Yes, no, maybe.
Yes.
Fantastic. JBP, JPY. I'm anticipating that yesterday on the 24th, we were probably in a buy, right? Let's go ahead and take a look. All right. I'm on a 1 hour. Okay. All right. Let's close that. All right. What's our date here? We are right here, 23rd. Nope. Oh, right here, 24th. Okay. So we're right here. Let me highlight this. Let's see, right here. Oops. I'm gonna widen it up. Let's change this color to clear. And I need to make this. It's the only thing when you're on here, it just makes everything. All right. I want to do that. Let's blow this up. All right, that's a 12. So let me see. And what time are we talking about? So we're talking about early 2 o'clock in the morning, 2 to 3 in the morning, right? So what do we see? We see this big giant candle push up, right? On the morning of Wednesday. Hold on, let's put a little arrow there so we can take a look here. Stretch. Okay. So most likely when the news came out, this is what we saw on the JPY. Okay. And then we're looking for what happened after the news. What I say, it can either level out, could continue pushing up, or could it came back down. So it looks like it pushed up, came back down, but it looks like it's starting to stabilize afterward and continue trying to go up. Hasn't broke this area, but it started to climb back up. And so this is what data points are kind of looking at. Of course, I would have had the currency strength meter to tell me what's going on. I would have looked at my structure. That's the next thing we're going to talk about is structure. And so it's not just one thing. See, that's the thing is it's a system. Trading is a system. Okay. I used to think it was just one thing. Oh, it's just, you just follow the 3 candle rule, or no, you just do the structure rule, or, oh, you just do the Fibonacci and that's it. No, that's where I had to understand that it's a culmination. It's like driving. Driving isn't just putting your foot on the gas. No, it's holding the steering wheel, it's putting it, it's looking around, it's checking, it's signaling. It's all this is a system. And so I said, well, if all this takes a system, it must take a system to understand or have a process to start analyzing. And I want something I can duplicate over and over again. So I go 1, 2, 3. 1, I look at my currency strength. 2, I look at the news. Okay. 3, I'm going to start looking at structure now. I'm going to start looking at structure. All right. And then I'm going to go from there. Now, you're not going to get all this in this one sitting that we're doing today. What I want you to do, though, is we're here to start having you put your system together. I want to give you some data points here so you could start piecing your system together. And if this is the bare basics of, I'm always looking at my currency strength because that keeps me out of danger. Because if something is pretty strong versus something weak, even if it pulls back, I'm not going to get scared. I'm not going to get scared of the market because I know, JPY is, GBP is strong. I know that. So I shouldn't have to worry. Of course, there's going to be pullbacks in the market. Nothing goes straight up and nothing goes straight down. It's got to weave itself along the way. But as long as the trend seems to be strong, then I'm in a good direction. I'm going to lose less. And that's where let the trend be your friend has came from, is if the ball is rolling downhill, it's pretty hard for me to kind of push upward when everything is rolling downhill like an avalanche. It's hard for me to turn around and climb back uphill if the momentum is all pushing me down. Well, shoot, I might as well sit on my butt and jump on the sled and just ride it on down. I'll go faster. I'll have less injuries. I'm not going to hurt myself. I just might as well go with the trend. And that's how I want you to think about trading, is starting to recognize these data points and to define the trend and then start making your moves inside the trend. Okay. That's that there. And so, okay. So that was yesterday. We're taking a look at that. Let's see if I do a 4-hour. You see what I'm saying? We're now in a bigger time frame, but you see how even on a 4-hour, it was pushing up. Look at that. Okay. See, it's been going in a trend. So we're just kind of following the data points. We're letting the market tell us, hey, how are you feeling today? How are you feeling this week? How are you feeling this month? And then I'll make some decisions. A lot of us are forcing what we believe it should go. Well, I want it to go in a buy. I want it to go. Well, no, I'm going to follow what the data points are telling me, and then I'm going to ride the roller coaster. All right. So that's the third part. Let's go ahead and talk about marking up a chart. All right. Marking up a chart. I mark up the chart the same way, always have, and it helps me because I like systems. I like duplication. I like stuff that makes it simple so I can do less thinking and more concentrating on the trading. If I keep it really simple, then now all I have to really worry about is entry. And that is what I found a lot of people have an intimidation about, they have a fear about, they have apprehension about is, do I get in now? Do I get in late? I don't know, Shawn, I don't. And then you look back and say, oh, I should have got in there. There's always opportunities to get in, always. Even if it left you, there's always opportunities to get in. And we have to kind of slowly get out of that because what 5 minutes ago was perfect for somebody else who just got on the chart, but there's going to be a perfect time 5 minutes from now that somebody else is going to get in the chart and make a lot of money. And then there's somebody who's going to get in 20 minutes from now that's going to make a lot of money. And then there's going to be somebody in an hour that's going to pop up their chart and they're going to make a whole heck of a lot of money. So we're thinking that there's a missing entry. No, there's going to be constant opportunities. So, all right, so let's go ahead and mark up this chart. Let's look at GBP JPY. I'm going to show you how I mark up the chart real quick. It works on stocks, you know, crypto, all that. It doesn't matter. I keep it simple. So what I do to make it simple is, first of all, if you have this chart, what I do is I switch this from these bars, okay, from these candles. I come up here and I'm going to switch it to a line chart. Look at that line chart. Okay. Again, let me do it again. I went from candles because we have a lot of wicks and a lot of people have always been like, well, I don't know. Do I make it my line at the wicks? Do I make it over here at the body of the candle? What do I do? So I've learned over the years, just switch it to a line. And now we have a better outline of structure. Doesn't that look a lot cleaner? A lot easier? Let me go back again. Look at that. You know, we got all these jagged edges. Boom, we got regular lines. And what I do is you pick a direction that you're going to stop. Either start from the top, go down to the bottom, start from the bottom, from the top, or some of you may start in the middle and go up, or start from the middle, go down. Whatever you do, repeat that over and over again. For me, I start from the top and I slowly make my way to the bottom. So now, how do I mark up a chart? I'm looking for at least a minimum of 2 points that meet in a general zone area. But I've also learned this because I used to be 1 point like right here and say, oh, do I mark that? Yes. Yes, that is a major reversal in the market. I want that. That is defining structure. It's like hitting a brick wall and it turned around. It's just a lot more defined than 2 or 3 points. And for years, I struggled with that because a lot of educators told me, oh, it needs to be 2 points. It needs to be 3 points, and then you make a structure. But then I'd always look at this 1 point, and for a long time, it would just get on my nerves. Well, am I supposed to? What does that mean? What is it? And then I said, dummy, that's structure too. Yeah, nobody ever says it, but it is, and you need to mark it. So I take my line, and I'm going to make a horizontal line, and I'm going to start from the top, and I'm going to put my lines. Let me switch it to a money green color, a little something green. Oh, no, I'll make it a little black. Let's do, yeah. So I'm going to slide it here because look, I'm touching points here. There's 1, there's 2, there's 3, there's 4. And I need you to understand, this is for us. This is a visual. There's no right or wrong because what we need is structure so that it can help us have a visual of where we could possibly enter. Really, these areas are zones. Ooh, that sucks. Way down there. Let's make it here. Okay. All right. All we're saying, all of these lines do is tell us, hey, Shawn, where does the market maybe seem to stop and want to turn around? Where does it kind of bounce off of? Because once we can determine the shape of our box, we know how to open our box. We know where the bottom of the box is. We know what the sides of the box are. You see what I'm saying? If I just give you some bubble wrap and tell you put stuff in there, you're kind of like, okay, but the bubble wrap really doesn't have any real structure to it. I don't know what I can really fit. But if I can start outlining the market a little better, I now can start finding out where the top and the bottoms are, where the sides are, and now I can start making a safe analysis, okay? Because and watch, as I start putting lines, stuff is going to pop out to you like a trend, like resistance. It'll start popping out to you. So let's put some more lines here, okay? I'm going to put it there. I'm going to put it right here at this tip that I saw, okay? Again, there's no right or wrong, but look, there's another tip here. Look, there's another point here, okay? Let's go here. Let's put a line here. Okay, I got a couple points here. See, point, got a point, I got a point. So I got 3 right there. Not bad. Okay, put it there. Let's I'm gonna come down to the bottom there. Okay, I don't want to inundate y'all too much, but I'm gonna put some simple points here. Okay, and then I'll just put a bottom point down here. Okay. All right. See, I have a point here, I have a point here, and of course, these little points. Now, I tell people when I mark up a chart, I'm really only marking up what's right here in the screen for me. You don't have to go way back and do all this for, 6 years, markups and stuff. Really, right here in your preview right here is really all you need. Because what you're doing is you're just looking at the past a little bit because it's creating some sort of pattern. Once you have enough data points to create a pattern, it now gives you some things to look at for you to notice. And I'm really going to slow it down here so that you guys can kind of see this artwork. I'm trying to delete that. Okay, good. Delete that box. Okay. So now just from this, this is going to be a little Q&A now. Just by looking at this, without putting any more lines up, are we in an uptrend? Are we in a downtrend? What do you guys see?
Uptrend.
Uptrend.
Does everybody agree?
Yes.
Okay.
Yeah.
By putting the lines there, did that help to recognize that very quickly?
Yes.
Yeah.
Yeah.
All right. So we make money in this industry by determining whether we're going in uptrend or downtrend. Okay. We're hitting some sort of structure. All this is structure: support and resistance, support and resistance, support and resistance. I tell people this is like the floors of an elevator. I mean, floors are like an apartment building. Okay. We got, down here is the first floor. Right here's the second floor. We got a third. And let's say we got a balcony up here. Okay. And what happens is the market is really just going from floor to floor to floor. And I want you to think of these floors like it has an elevator on it. So we took it from the first floor, we rolled the elevator up to the second. And what we have to determine is it going to come back down to the first floor, or is it going to break through and go to the third floor? That's it. And that's where we all get caught up is, I don't know, Shawn, I don't know where it's going. And you're right. You never really know where it's going. But the good thing is you only make money if it goes up or if it goes down. You don't really make money if it starts going sideways. Okay. We want to wait. And this is where patience comes. When you wait, the market will tell you where it's going. It'll tell you where it's going. Okay. And where we're going to enter is we're going to enter close to these floors. And guess what? You're never too late. That's the thing I had to get in my head is, oh my God, it's too late. It's too late. Well, if I was in the middle of the floor, okay, I would wait. Why? Because I want to wait till it gets to a floor. Because just like an elevator, okay, can you get on an elevator in the middle of a floor? Yes or no?
No.
No, you have to wait. No, you're going to have to wait until it gets to your floor. So that's what I want you to think about in trading. You only get on once it comes to your floor. Okay. Once it gets to your floor, you can determine whether you're going to go up, whether you're going to go down. Okay. And guess what? Your currency strength meter can help you with that. So if I was looking at this GBP JPY, I would probably first, to help me determine whether I'm going in a buy or sell, is GBP would need to be strong and JPY would need to be weak. So that would be my first clue that this is possibly going to go into an uptrend because GBP is strong and JPY is very, very weak. That's my first indicator. So I already know I'm probably going to go up in a sell. Go up in a buy, excuse me. I'm going to check the news so that if I jump in, hopefully no volatility will push it the opposite way and hit my stop loss. That's why I want to pre-check the news. Okay, I find out, well, at 8:48 p.m., there's no news going on tonight. So I should be pretty clear that the market is probably going to move in its normal momentum. I now just need to determine where it possibly could be headed. Well, I don't want to enter in the middle. I kind of want to wait at one of the floors. I'm either going to enter here on the first floor or I'm going to enter at the second. If it reaches the second, I'm going to wait to see some sort of confirmation on whether it's coming back down or whether it's going to break through. And we'll talk about that next step. But if it breaks through, I'm looking to go to the next floor. If it bounces here, I'm looking to maybe come down. If it breaks through, I'm looking to go to the next floor. And that's it. Ladies and gentlemen, that's trading in a nutshell. All the indicators and all these special tricks and all these special little formulas that we have, all it is determining, are we leaving the floor going to the next floor or are we coming back down to the floor? Okay. I mean, I could put fibs on this and this will tell me, oh, you know, from here to here, you know, this retracement came to between a 5.0 and a 6.18 in the golden area. I promise you, if I put fibs, it'll probably end up right here, which means, okay, once it went up a little bit, it's going to up in a continuation. Boom, I know that. Great, you could use that tool. Or you could use your stochastics and RSI. You'll see, you know, maybe if you have the colors matching, you'll see a blue over the red. So that lets you know the strength is going. Same thing as a strength meter. Same thing. All those indicators are great. It doesn't matter what you use. Just find what you want to use and stick to it. But structure is king of everything. Okay? It's like hitting a brick wall. I could go 100 miles an hour, but if that wall is there, I'm hitting the wall. And the indicators usually will follow behind. I know some of you guys have heard me say that before in trainings, is an indicator just like your speedometer in your car. When you hit, you know, when you go from 0 to 60, you got to understand your car hits 60 miles per hour, but your tachometer, your speedometer follows behind. It hasn't caught up with that because you got to understand your car has to give the data points and process through the computers to get to your speedometer. It's not real time. It's not like right now, boom, the speedometer. No, it trails behind. That's how indicators work. It first has to take so many data points, calculate a medium range, the high and low of 5 candles, the high and low of 10 candles. That's what, when you set up your indicators and you're going a 10 and a 20 moving average. Well, what the 10 means is that you have the high and low of 10 candles, and then you divide it, and then you come up with a medium, and then that's how it forms the line. Well, the candle's got to be moving for it to form the indicator. If it's not moving, the market stops moving, there's no indicator. You see what I'm saying? But structure is right here. It's either going to hit structure and turn around, or it's going to break through it. And once I have that, I pretty much have about 80 to 90% of the information that I need. I know this is structure. There's only 2 things that's going to happen. I can only do 1 or 2 things. I can either go up in a buy or go up in a sell. So you're already 50% right in your decision. You're just using the data points to help you determine that. That's where you use the indicator. That's where you use the strength meter. And then structure just lets you know, what does my box look like? What confines am I working in? Okay. So let's look at this. Look, since we've been talking, look at this. Okay. So I'm still not switching the candles yet, but look, right? We're up here. Let me blow this up. I don't even have to use candles, but look what's happening, right? It's rejecting. It came up, came down, it retested. That's what a retest is. It came back to say, is this wall really solid? I don't know. Once it retested, do you think maybe that might be a good opportunity to get in the market? Yes or no?
Yes. Yes.
Pretty simple, right? So if we enter, are we doing a buy going up or are we doing a sell going down?
A buy.
Still going
A sell.
down.
A sell.
Going down.
Still.
Sell going down, right? And if we were to go in doing a sell, let's just measure
How many pips?
pips this could be. Let's just say we entered right here halfway and came on down. That right there, just to this structure, is 28 pips. If I was making $10 a pip, that would be $280,
Wow, that's so good.
right?
Or $28.
Or 28, or 2,800, or $20,800,
Come on.
or excuse me, $28,000. I'm sorry, or 280,000.
My
The
God.
only difference, see, what I want you guys to get is, don't worry about the dollars. Worry about getting the pips. If I can show you how to consistently start getting these pips, then now the only difference is how much per pip that you want to put up. And
Right.
that determines the size of your account. Okay. If you only had a $500 account, then you should be doing, you know, $2 to $10, $15 a move to grow that account to 600, then to grow it to 800, to grow it to 1,000. When you get to 1,000, you can now start doing, you know, $2, $5, you know, $10 a pip. You can start adding a couple $100. You see, when you get to 1,000, or I'm sorry, you get to 5,000, you can start doing $20, $30, $40 a pip. You see what I'm saying? That's the goal, is compounding patiently. Look at that. See? All of you have determined that once it retested this area and it didn't break through, that the only other direction it could do is what? Do a sell. And then we're going to close it out. And then I'm going to make another decision here. Is it going to go up? It's going to go down. Well, guess what? We're going to do a retest. A lot of times, not every single time, but a lot of times these structures will retest. And a retest is only saying we tried to break through it once, but we're not sure that that will hold. So we're going to come and bust at it again. After a couple times, most likely, it probably is holding. We may go down. But guess what? It can test it a third time. It could. And that's okay. So that's where I want you to start doing incremental trades. Like start shooting for 15, 20 pips at a time. See that from here to here, from this structure up here to this one down here. Look at that. That's 42 pips. Now, a lot of people say, oh, I'm going to go for the whole 42. No, that's where you got to understand, the more pips you start going after, the more you start opening yourself to risk. Okay. I don't know how many sports fans I have, like for football, but I'm going to use a football analogy. Every time I take the ball and I start throwing it in the air and start trying to throw for 20, 30, 40 yards, I open myself to the whole field for people to intercept it, to knock my player down, to jump in the air and get the ball, or to knock me down before I do it. But if I can consistently give the ball to somebody and just say, look, just shoot for five yards at a time. Let's just keep going up and getting five. Before you know, you've gone 100 yards, but you've done it more conservatively. Because if I put it in your hands and you hold it tight as you can, and you run just a few yards, you don't have the whole team trying to tackle you. You only have about 2 or 3 people. But if I throw it in the air and I'm starting to go for 50 pips and 60 pips and 80 pips and 120 pips and 2,000 pips, I now have the whole team after me. So I want to teach you that moving easy and just shooting for maybe 10, 15, or 20 pips, that's usually what I try to do, and complete that play and then reevaluate and go for another 20 pips will slowly add up. I'll be honest, the most I would go for is 40 pips in a day. That's all I need. I don't need to hang out in the market. See, a lot of you are trying to get 2,000 pips in a day, and what happens is you're opening yourself up to risk. You start analyzing too much. You start looking at stuff too much. The chart starts speaking Chinese and everything else to you. You know, you get all tired and you start getting weary. Your eyes start playing tricks on you, and then you start losing money. And then you get frustrated. And then you say it doesn't work. And then you get out. And then, but then you wake up refreshed and say, I'm going to try this whole system again. So I want to get you out of that. I want to get you out of that. I want you to start breaking it down in small pieces and just start doing it. And trust me, you can make $1 million on 20 pips at a time. because it's determined by the size of your principal, not about going for 100 pips. You think you're getting it faster, but what you're doing is you're opening yourself up to way more risk, way more risk. And I want you to start moving. That's why a lot of us are blowing our accounts. That's why a lot of us are over leveraging, because we have too small of accounts and we're going for 100 pips. It's a recipe for disaster. Okay. So the first key that I'm going to tell everybody is, if you're doing Forex or you're doing trading, you may not have enough money in your account, because the more money that you can put in your account, the more hits you can kind of take. And I don't mean that you want to take a big hit. What I mean is you have a little bit more grace. You have a little bit more latitude. So for instance, if I have $1,000 in my account, that's why you see a lot of brokers back in the day say you have to start with $1,000 or $5,000 account, because they know if we have a bad day, you might lose $200 or $300. Well, $200 or $300 on a $5,000 account, right, is a lot easier, not easy, but it's a lot better to take than on a $500 account, right? And you lose $200, now you're down to $300. Now your moves are very, very short, and it frustrates you because you're like, oh, I want to grow my account fast, so let me try to do this 30 pip move. But then you're mad because you only made $10, but you only have a $300 account. So you had to do a 30-cent lot size. You had to do a 0.03 and then you see, so we're frustrating ourselves because we're not starting in the most optimal parts, and we're going too risky. We're throwing the long ball when we have 100 players on the field against us. And what I want you to do is start making small incremental growth and start patting yourself on the back because you're completing a 10 pip move. You're completing a 20. Try not to go over 20 pips. If you do, take a break, take a breather, reanalyze the chart, and then say, okay, I'm gonna go for another 10, or we'll go for another 15. Okay. So that's kind of the mindset. So see, look, we anticipated that this was going down. Now it probably will. It probably will. Or it may retest this structure. Either way, guess what? I'm not going to be stressed. You know why I'm not going to be stressed? Because number one, I don't have a crazy lot size. Okay, that's the first thing. The second thing is I'm only probably going for 15, 20 pips. That's okay. I'm not gonna cry if I, don't make it. The next thing is our stop loss. Always, 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 I don't care what nobody say, always trade with a stop loss. Every single time that I didn't have a stop loss, every time I always messed up the account. Now I've only done it a handful of times, but every single time I did, I ended up messing my account. A stop loss is exactly what the name is. It stops your loss. And if you're not trading with a stop loss, it's like driving a car at 100 miles an hour without a seat belt. So Shawn, where do I put my stop loss without the guessing? You've already made the box. You made the structure. Guess where you put your stop loss? You put it right outside the box. That's all. It's not bright enough. There you go. I still don't like that red. Let me see. I got it. That was it. Okay. That's where my stop loss goes. If I'm going down in this direction in a sell, I want to put my stop loss in the opposite direction, and I want to put it right above structure. If I'm going down this way, stop loss goes up here. If I'm going up in a buy, I'm going to put it right under this structure. You know why? Because I want to hurry up and get out the market and reevaluate my position quickly. So if it was going, let's say I put it up here and I said, man, I thought it was going down in a sell, but then it stops me out right here. Great. This goes to the 222 that I was talking about. Okay. What does the 222 mean? 222 means I'm going to find at least two pairs that I'm working with. Okay. I'm only going to, hold on, what did I put back in my 222? Two pairs, no more than two strategies, okay? So whether you're using the Ichimoku cloud, whether you're using the bounce back strategy, whether they're using the BYOB strategy, whatever strategy that you've learned, alternate no more than just two of your strategies. If you're not feeling one strategy, that's fine. Go ahead and do another, but don't do 5. Because see, now you're overloading. Again, now you're overcomplicating. Now you're overanalyzing. Don't do that. Every single strategy that you pick works. Every strategy that you pick works. It doesn't matter, because if somebody developed it, it worked. What I found was the system. How does it work in your system, though? It doesn't work by itself. It works in a system. It works with checking the data points, and then you implement your strategy. You got to find out what works with your strategy, okay? So for me, I have safety nets in place in my system. I'm going to always put structure regardless of whatever strategy I'm doing. I'm always going to use a stop loss. I'm always going to check my currency strength meter. I'm always going to check Forex Factory. These are non-negotiables because I can stay consistent that way. So now if this were to go up and hit my stop loss, I'm not going to get mad because this goes to the 2 to 5%. My stop loss is calculated where I'm not going to lose more. I'm going to lose either between 2 to 5% of my account. 5 is really aggressive. 2% is pretty conservative. 3, if you're 3 or 4, that's great. But you should not be risking more than 5% of your balance. And once it hits, okay, I'm down, let's say 3%, not a problem. I will reevaluate because I said, okay, now that I look at it, it's creating a new high. It broke the structure. So now I can jump in back in the market and I can go for 20 this way. And hopefully I can regain my loss. That's why you want a stop loss right above your structure or right under your structure. It's stop thinking of it as a bad thing, because that's what we do. Oh, I blew my account. Oh, I hit my stop loss. See, I did that for longest. Oh, I hit my stop. No, the stop loss is good. That's the seatbelt that kept you from flying out of your front window. Now what you do is you reevaluate. You go right back through the process. Let me go back again and check my currency strength meter. Let me go back. You don't have to check your Forex Factory because you already know the news for the day. But let me go back and check my structure. Let me look at my strategy. If I'm looking at 1 or 2 indicators, look at my RSI. What does that say? Look at my stochastic. If I'm using that, what does Fib say? Whatever you use, go back and reevaluate it, and then go back into the market. But keep it where you're getting 10 to 15, no more than 20 pips at a time. Okay, that's the 2, 2, and 2. Look at 2 pairs. Try to keep no more than 2 strategies that you really stick with and stay on it. And then don't risk more than 2 to 5% of your account. Okay. Let's go back to candles. Here's some other tricks of the trade. So we got candles. So look at that. We're in this channel right here. We got a lot of wicks going on. You're going to find that at this time of the day. We're spiking and doing stuff. That's fine. It looks like it may consolidate in this channel. So for those of you who like pending orders, what's a pending order? Well, guess what? I can set it up to where I can get into the market if it breaks out. That's a real conservative way to trade. Take this out the way and let's put a pending order. Okay, let's see. I could go ahead and put an entry here to enter the market if I want to catch it. I could put an entry here to catch it. I don't know if y'all ever thought about that. This is like a fishnet. I call it the fishnet, right? Let's just say, okay, I'm not real sure. I think maybe it may break through here. Okay, cool. So I'll watch it again. And it may. Once it breaks through, it's going to enter the trade here. And then I'm going to make a 15 or 20 pip take profit down here. I'm not going to be greedy. I'm not trying to go all the way down here. I'm going to do it in stages. I'm going to enter here and I'm going to set my TP for 10, 15, or 20 pips. Let it complete and then reevaluate. Is it going to head back up and retest? I don't know. Maybe it'll continue down. I'll jump in again for another 10, 15, or 20 pips. And then I can eliminate, I can cancel this pending order because I'm already in this trade here. And then guess what? I can now change this into a stop loss. Okay, I change it red. Oh, I have 2 lines. Let me take that out. Okay. Change the color. And then let's say I enter this trade. I'm not trying to be too complicated, but let's say I was waiting and I said, oh, it entered the trade there. Well, guess what? Now I can have a stop loss and I'm going to put it right here above the structure. And then guess what? As I complete it, As it comes down and I hit my take profit and I enter again, I start, hey, I'm gonna move this stop loss and secure it. I'm gonna secure my profits. So you almost have a risk-free trade. We've heard that term before, but what does that really mean? What it means is once you're in profit, you want to secure that profit. So let's say I entered at this green line, right? And I'm doing $1 per pip and I get down, I'm at $25. Okay, I had my stop loss up here. Okay, comes down, I'm at 25, then I'm at 50. I want to at least secure half of that. I'm gonna move that down. Boom, I'm gonna put it halfway. So even if it goes back, guess what? I never lost anything. I've got 25. No, I didn't get 50, but I got 25. My goal is I may want to make $100 today. Man, I need 75 to finish my daily goal, right? I see another good trade. It enters me in. Let's say I enter here, right? This is another entry, okay? Come here. It's going down. I'm at $75. Good. I'm going to move this to entry. I'm going to put a stop loss there. Now I'm up. It's at 50 here at the stop loss if it were to come back. I've secured $50, but now it's 75 profit. I needed room to dance. I can't be right up on it because it may just shoot a wick or something and cancel me out when I could have gone farther. But I'm securing half. See? I'm securing half. Okay. Continues to go down. I'm at $100. I'm going to again, put my stop loss, move it. I'm going to move it down to the $75 point. Boom. $75. I'm securing it. That's if you, and look, see where my next structure point is? I still trade, but I'm securing my profit along the way. These are strategies that I learned over time that helps you to minimize your risk. What happened though, I went through a whole period where I'm so happy. Okay, I done put my stop loss in because the educator told me put your stop loss in, but my dumb self forgot to move it. Right? I'm all the way down here. I'm about to go here. Oh, I'm dancing. I'm about to make $1,000. I'm gonna make $1,000. Okay. And then all of a sudden, guess what? Some news hit, right? And it went all the way. I guess I'm the only one that happened. Put a 1 in the chat if that ever happened to you. Get all the way almost to your take profit, and it came all the way back. I'm the only one. I'm the only one. I'm the only one. Oh, okay. I just want to know who I'm talking to. And I didn't move my stop loss. And now I'm getting scared. It's gonna go down, it's gonna go back, man, I can't believe I was $1,000 in profit and now I'm down to $100. I can't get out because I want the 900 back, right? So what got me out of that? Start securing your profits. Start securing it along the way. Start being a caretaker. Stop being an accountant over your trade. If you're going to start going longer trades like that, then start securing along the way. And guess what? You start having risk-free trades. Okay? Risk-free trades. Okay. Got candles, got that. We switched to line. We talked about securing our profits. We talked about structure. Of course, you guys can do a lot more. Let me take some of these lines out because I know I have artists on here. There's people who love all kinds of lines on their chart. I just don't do it. I don't do it because I just like to keep it as simple as possible. I like to be a third grader every time I'm trading. I just want to be a third grader. I don't know what that is. I'm just going to keep it really simple. So, in other words, let me shrink this down. Okay. You can start doing all kinds of things like adding your horizontal line. You can start where you can, start having lines to break, do lines like that. You can get fancy schmancy with it now. Okay, so what this does is, hey, it's a trend already here, but I'm putting a trend line here to break. So when it breaks, that could be part of your system. Hey, I'm not going to enter unless it comes down and breaks that. It bounces here and then comes down. And right here, I'll enter. That could be part of your system. Nothing wrong with that. You know, just whatever it is, find it and keep it really simple. You have, I know Dre and Shareem have been promoting colors. This is the same as color. Colors, if you're not in I Am Master Academy, is pretty much just like this, where this these lines, these structure parts are highlighted on a software that was proprietary designed by I Am Master Academy, that has the top part would be red and the bottom would be green. And what it tells you is when it comes out of the red zone, you're going to do a sell with the red candles. It kind of helps you to recognize what color. If it's green on the bottom, it tells you when it coming from the green part, you're going to get in a buy. And then when it breaks the structure, you know, it starts having little arrows and little stuff. It gives you some indicators to help take the thinking out. And I'm really great with that. You know, it's a great product. You know, Dr. Spiller, one of my friends, and you know, in the business, I've gotten to know him and speak to him personally. I mean, just great software. And so we have software that already kind of outlines which direction you should go. It has an arrow to tell you, oh, you see the arrow, that's when you should go in. But if you're not there, if that's not where you are at the point, it's okay. You know, this is the basics of trading are these things here, is determining your data points and finding out, are we an uptrend or downtrend, and then trading with the trend. Once we find out that we're in that trend, you can get in anywhere here. You want to get in on this floor. You can get in on this floor. Doesn't matter. You can get in halfway if you want to. But some of the best areas and the most opportune is near the floors, because once it breaks through a structure or bounces off a structure, it has pretty much told you, I'm leaving this area. When you're in the middle, you can do it too, but you're still kind of, it's a fake out. This is where we get faked out the most, in the middle. That's why it's good to do it at a structure point. The last thing is, doesn't matter what time frame you are. Okay, if you are what we call a scalper, you tend to be on the 1 minute or the 3 minute. You're really only shooting for less than 5 pips, pretty much. You know, 5 minutes, same thing, pretty much too. If you're on a 10 minute or 15 minute or 30, you're usually shooting somewhere between 10, 15 to 20 pips. So I tend to kind of hang in that 15-minute time frame when I'm doing 10, 15 pip trade, or 15 to 20 pip trade, because I don't want to be in there forever. You know, I just need enough data points. That's all these times are, guys. A lot of people are like, well, I don't know the difference between, should I be on this? It's just data points. It just depends on how much data do you want. Do you want a minute worth of data? You can make decisions off that. If you want 3 minutes of data, do you want an hour? And again, let it fit your time frame. There's a lot of times when I'm sitting in front of the computer, I will trade off a 5 minute or 15 minute, because I know I'm only going for 5, 10, 15 pips. But let's say I have a busy day and I'm like, hey, I kind of want to, my goal is I want to make 40 pips today. I may jump to a 30 minute or a 1 hour. Okay. Look at that. So I'm on a 1 hour chart. It left here. I may just set up a 20 or 40 pip take profit. Let's see if I were here. Okay. I'm at 30 pips here. Here's 40, 45. It just depends. I may, because it's hit this structure, it may be going, I may just set up a trade here and just sit in it all day. I put it in when I go to work. By the time I get off work, 8 hours later, hopefully it's hit my take profit. 40 pips, done for the day. Doesn't matter how you get there. The point is, you can either do it in little chunks or you could do it, you know, one shot. It's totally up to you. I just don't try to go for 50 or more necessarily without being, without really analyzing and being in front of the chart. You can definitely do that. If you're a person that really likes to be on longer time frames, like a 4-hour, that's great too. I mean, you just find out what kind of trader you are. If you're an intraday, you're a scalper, you're a swing trader. Swing trader just means that you're swinging. You start off on one particular session and you swing from that session into another session. So I may start off a trade early in the morning at 8 o'clock, but it ends up into the Asian market, maybe later on tonight. So I've swung over from the New York session into the Asian market. Okay. And so I can swing. I might stay in for 2 days. So I've done a trip in 8 different markets. So I swung in different markets. So that's all swing trading is. And depending on the mood and how I feel and what the goal is, I've done it all. So that's what I mean when I say find out what works for you. Some of you are really impatient. You just want to be in and out. Look, Shawn, I don't got time to be sitting in front of a chart. I want to be in and out. So you need to stay on a 5-minute, on a 3 or 5 minute or 10-minute chart. Okay. Look, I'm watching somebody. I'm sitting here at work. I have a lunch break or whatever. You might do better on a 15-minute or a 30-minute chart. You might do better right there. Hey, Shawn, I got all day. I don't really have to, do a lot. That's great. You still don't need to be in front of the charts all day long. You still need to pick a window of an hour or so, if that's what you want to do. And then you can make a goal of trying to do 40 or 50 pips at that point and break it up. Find your 2, and then you split it up and you do that. And then once you get your 40, get off the chart. Stay fresh. Look at data. That's what I did. That's how I learned to get better is when I got off the charts, I would read the Forex Factory news. I would learn about what's happening with gold. If you're a gold trader, if you're a silver, if you're an oil trader, if you start learning about those things. Forex, I really wouldn't study as much because there's just so many Forex pairs. I just want to go on the strength of it. But if you're a specialty of crypto, then spend your time more so reading and studying crypto so that you'll have a forecast in your mind. So when you read the data points, you know how to interpret the data points correctly. Okay. When you hear about gold, you got to understand that it is opposite of the US dollar. You see, so what would I be studying? I'm studying what the dollar is doing because that is converse to gold. So if I'm understanding that the dollar is getting weaker and the dollar has fallen, well, what does that mean for gold? Well, that means gold's going to go up. So I don't need to, you see what I'm saying? Study these little things. If that's where you want to make your money, then study those areas carefully. And that will give you the data that you need. And it gets easier and easier. So if you're a gold trader, which I know I do have gold traders and I have US 30 and all that. Well, if that's the case, then you need to study the dollar. You need to study what's happening in these markets. In US 30, you need to see what these, you need to really pay attention to those little pieces of news so that you can really master that area. And again, two pairs. So if you're doing US 30 and gold, then let that be your only 2 that you stick with. And then no more than 2 strategies. And then remember, don't try to risk no more than 2 to 5% of your account. Okay. So I know I poured a lot. I hope you guys got some good notes. We're going to open up for Q&A. If you guys have anything, there's nothing that's off the table. Just ask and we'll go from there. Just don't, ask how much money I make. Just ask all the rest.
How much money you make? Joking. Just joking.
IRS may be on this piece. I can't be saying all that.
Right. This was amazing. I mean, we didn't go on live on Facebook or anything. This was really amazing. Like, you said so much that actually I didn't know. I thought I knew how to trade it. So I'm like, my God.
There's a lot of notes over there.
I mean, because I never looked at trading like that. I think even listening to the educator, I mean, he said something similar to what you said, but I didn't look at it the way you laid it out. So I'm really grateful that
well, hold on, Shareem, because I don't get to talk to my sister as much as possible, but you are a plethora of knowledge and stuff. I want some feedback. Like, tell me what.
Oh no, I'm getting ready to get into it. I'm getting
Oh
ready to get
yeah,
into
okay.
it.
Let me sit back. Yeah.
No, I was getting ready to get into it. I thought this was like really, 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 really good. The fact that you went over the Forex factory and letting us know what we should look for and why we're looking at it, and the currency strength at the same time. I don't think I've ever got it broken down to me in that way. And so I'm super excited about that. The way I look at it is going to definitely be different. So I'm really grateful for that. And for the people that are on the call, I hope you got something out of that alone, because looking at those envelopes, the red, and knowing what to do with those things. I mean, and then you showed us how to look at the forecast of it. Like, it's just so much nuggets that you dropped. I'm not even looking at my notes because I got it up here because I'm like on it, like, wow, I never looked at the forecast before. So I mean, if you haven't done it, this is something to do now. And you made me look at a blank chart, which I'm normally looking at candles. I think I'm going to start looking at just the line chart because it did make it that much simpler. And then I normally just do the bottom and the top, you know, the highest and the lowest, but you showed me that I need to do a few more steps. And then it's going to show me how, you know, how I'm looking at my trading. And I just thought overall, it was great. It was just great.
Awesome.
You really made the trend, my friend. Looking at how, you know, looking at even just an overall trade. Like, I don't even have to look at what the academy is giving me, but I can actually look at a chart right now and really clearly know the direction of, you know, the trade is going in based off of the lines that we drew, the setup that you just gave us. So I thought it was phenomenal. And I definitely looked at it as a football because my son is in football. I'm getting understanding now. So I thought that was amazing. So shout out to you. And I hope everybody else got value. Look, I don't even have to look at these notes because it's definitely in my brain. I was paying attention, but I was taking notes and I was paying attention because I don't want to forget it just in case. But this was phenomenal. This was really good.
Thank you.
I know for a fact that I'm ready to trade.
Woo-hoo-hoo. See,
And not just trade, but trade more, of course. But I mean, trade and with the setup.
Right.
You just gave us. That's what I mean.
Cool,
Trade with the setup.
Cool. Don't worry. I got a couple more surprises for you real quick before we end this thing. Cause I told you when my brother and sister asked me to show up, I am showing out. So don't worry.
Fourth. Did you get anything from it? Fourth.
Absolutely.
Yeah, talk to me.
What's going on, James? I appreciate you for taking the time out. I know we had that challenge earlier, and everybody, I won't say we failed on it, but we didn't come through on our end. So I still appreciate you for taking your time out to drop these jewels on us.
Yeah.
For me, it was the structure part, changing it from changing the chart to that line chart. It makes you see it easier so you can put your structure in. I've been following Kurt Cobain, and I've really been working on getting into Fibonacci and colors. I know they just added it to the impulse pack.
Okay.
So I want to get back into that too, because to me, that's a little easier for me to grasp instead of which one was Brandon Boyd doing? Impulse, which it's great, but for me, he's more relatable to me. So after you broke it down for the lines and put the structure in, it was way more easier to see what's going on. And then implementing the Forex factor, and I kind of knew about the currency strength, but I didn't realize how important they were. So I definitely appreciate you breaking it down like that because it opened my eyes way more now. So I'm ready to dig in and dive in and get these ching-chings.
Let's go.
Ching.
That's it. What else we got? Come on, I want to hear from the rest of my family. What's going on?
Exactly.
Sean, it was good. Sorry, I got my camera off because I'm saving my battery.
Oh, you good? You good?
But it was really good. I never thought about switching the candles into the line chart to mark up. So I'm gonna really take that strategy from you and just knowing that, you know, making support and resistance lines. Because with me, I will only make one set, but seeing that you went down and made multiple sets, it kind of really tell you exactly how far the market can go if you're looking for a downtrend or an uptrend. So that was really helpful for me. And then I love the fact that you said 2 pairs, 2 strategies, and 2 to 5%. Because when I do mine, like I'll combine like 3 to 4 strategies, and then I'll miss my trade, and then I get in. It's a late entry. So it just related to me because I overcompensate what I'm looking at. I know I'd be right, but then I got to go back and check this, and I got to go back and check that. But so thanks for that. That really did help.
Good. And if you can try to, I know it's common to try to mix 2 and 3 strategies together because we think we're being more thorough, but I'm challenging you to simplify that even more. Just take what I showed you and just stick with one, at least try it for a couple of weeks and see which is easier to you. Okay. Not which is harder, because we think harder is better. No, I want you to start thinking backwards and make it simpler and more consistent. Okay.
Got you. Thank you so much. And I have seen my trade win to lesson ratio going up since I started cutting back. Just checking so many times. So yeah, that really did help. I appreciate this.
Awesome. What else we got? Anybody else? Come on, I love the feedback.
Okay, so we need to look at Forex Factory before we put in the trade, or just know what's going on with the pair?
Just know what's going on with the pair. I just look at it just for that day, and just let me know whether I want to deal with that pair, or maybe I just don't want to. And sometimes it's not even a pair that I'm probably dealing with because of the time of day. Because remember, I just want to clear as many roadblocks that could alter my trade. That's why I'm really looking. Now, of course, there's a whole nother genre that some of you have already known, but you could trade the news, where there's a whole community of people that all they do is trade red folders, because again, the red folders help to spark volatility in the market. So when at 8:30 comes, they jump in the market and they set their pending orders. And then when it shoots one way or the other, they can catch those pips and hurry up and close it. And I mean, I've seen some phenomenal stuff like that. My schedule doesn't really allow me to always follow, the folders and trade the news like that. So I like to just keep it easy and just trade what's convenient for me.
Okay, so when is the best time to get out? Getting in is one thing, getting out is another.
Okay, so let's talk about that, because so now that you saw your entry points and we marked the box, where do you believe you would get out? There's two answers to it. So, but I'm gonna let you figure out. Jim, you can jump in. Whoever can jump in.
Cause I'm in 2 trades right now.
Okay.
And they went the total opposite direction, but it's weird because it'll go one direction, consolidate, go where I wanted to go, turn back around, consolidate. So one thing I learned these last couple of months with me trading is that sometimes I'm getting out too early, because I'm seeing it's going the wrong direction. I'm like, oh, I lost this trade. I'm just gonna get out because the number is so high. However, I also learned if I stay in and I'm learning structure, I go back, I look at the market, see what it's doing, and then I stayed in longer. And one of my trades, I got the outcome I wanted. My thing is just when it is just like the 2 trades I'm in now, it's going one way, and I'm thinking it's going the way I want it, and it consolidate. Then it go completely the direction where I don't want to go. Then it consolidate. So I'm just like, when do you get out of that?
Okay, so I'll answer it for you then. First of all, you're in there. It's kind of like you want to go in there with your intentions already known. Okay, you just don't want to get in there and then let the market handle you any old way. So my thing is there a goal? Is there any amount of pips that you were trying to get it? Do you have a take profit point?
I can't say. But I was basically like, okay, how much am I willing to lose in this trade? So I felt like when it went the other way, or was trying to go a better way, and the number had decreased on how much I would lose, that would be the determination on me getting out or either staying in.
Okay, so I know some of us who are experienced, we kind of know that feeling. So basically, you were kind of going with the wind. You just kind of let me jump in. okay, when the numbers add up, okay, it looks like $30, $40. Well, I'll just stay in because it looks like it's going higher, right? And then it's like, oh, it's
And then
going back.
sometimes like,
The thing
just
about
going,
it,
you know what you're doing.
right. So that's why we want to add a system to what you're doing, Betsy, because, and that's why I said the 2, 2, and 2. So the first thing is try to make a goal just to try to get 10 or 15 pips. That's where your exit is, because you put the line in the sand. You're going to wait. If you made the right determination, if you analyzed it, you maybe marked it, and you feel it's going that way, you will set your take profit for those 10, 15, or 20 pips, and you will not touch it until it gets there. Okay. And then you're going to put your stop loss. That's the box that you're creating. And so the market's going to move in the box. And so, yeah, it may consolidate. It may do this. I mean, I've literally had put in a 20 pip take profit, which seemed like, oh man, all it's got to do is shoot down and hit it. But it literally has stayed in there for 2 days because the market made it consolidate and it just stayed there. But guess what? I never got out because it's only going to do one of two things. It's either going to hit your stop loss, which you're out. So that's your exit, or it's going to hit my take profit, right?
Right.
I'm not worried about my stop loss because guess what? I'm only risking what? Can you remember how much am I risking?
2 to 5.
There you go. But my 20 pips is really going to be 3 to 5 times my loss. So if I'm going to give up 5%, I'm making 15% as profit. You see?
Okay.
So that's how I'm going to stay at growth. And so that's where a little math takes it. You don't have to do a lot of math, but you got to do a little math. And if I'm willing to risk 2 to 5, I'm going to make 5% or more. I'm not going to, lose the same amount because now I won't grow anywhere. You always want to at least double or triple your amount. Okay, so that's where it is. Now, the second answer I said is going to be your 10, 15, or 20 pips to be your exit, or it can be structure. Okay, it can be structure. Remember, I did the lines. I'm going to go, and usually I'm going to do about 10 pips before the end of structure. Okay, so in that example, where let's say from the top to the bottom is 30 pips. I'm going to, remember, I'm in that, or let's say it's 50 pips from the top all the way to the bottom. My take profit point will probably be somewhere around 35 to 40 pips. I'm not going to, it's probably not going to make it all the way down the structure. It may, but I'm not gaming on that. I want to go ahead and get out right before it gets there because I don't want it to consolidate at structure. I don't want to dance around and get stuck at structure. I want to hurry up and get out before it gets down there. And then I want to reassess if it does make it to structure. Well, what should I do now? It's either going to break or it's going to turn around and go the opposite way. Well, guess what? If it goes the opposite way, I'm still going to enter 5 or 10 pips away from structure. And then ride it back up another 40. You see what I'm saying? Another 20 or 40. But I'm going to break it up. I'm going to first do 15 or 20, make that. Then I'm going to ride it up another 15, 20, make that. Okay. But remember, let's say it goes up and I ride it 10 to 15. Once I make that first 15 or 20 pip take profit and I made that money, I'm now going to put my stop loss up and then enter again. So even if it comes back, I still kept my 15, 20 pips from the first time. See, so now I'm in risk-free trading now. I'm securing that part. That's the part that I want you to start adding. So first of all, when you determine what direction you're going to go, I need you to start making, and for you, Betsy, because Betsy's on my team, and so I've been working with Betsy for, man, she's been, 3-4 years rolling with me. And she's finally like, okay, I'm getting serious now. So it happens, guys. It happens. We go through our learning period to where we finally say, I have enough info where I want to take it seriously now. I want you to start baby steps and start doing 10 pip take profits. Just 10. Just 10.
I had a question.
Yes.
do you mark up your chart? So like you said, there's a time frame that you look at everything. Do you then mark up your charts and then like a couple minutes? Because I mean, if you're studying the charts on how the pattern works, you're gonna know, okay, let me get up a little bit earlier so that I can mark up the chart so I can see exactly. No, you get up at 9, let's say 9 o'clock, you want to trade, you're gonna start looking at the market, marking up your charts, and then taking a trade at that point based off of the setup.
Okay, so remember
I'm
we're
asking.
doing, yeah, I know. Remember, I'm
Okay.
doing 2, 2, and 2, right? I only
Right.
have 2 pairs. And so I'm only going to mark up what?
2 pairs. No, I got that.
And you
I only
saw me
focus
mark
on
up that chart. How long do you think
Oh.
it would take me to mark that up?
Not long.
Yeah.
Not long, right? So I'm doing live. I'm marking up as I pop it up, and that's it. I'm going to keep it on my chart, and I'm just going to trade off of that. So
Are you trading off of that for the day or just for that time frame?
for my 40 pips for
Okay.
my goal. Yeah, for my goal. If I jump on tomorrow, I'm going to redo that, or I probably could leave it. I probably could leave it because it's going to respect that structure regardless. I've kept a chart. For some of you who see me on TradingView, I've kept my markup for 6 months, and I was able to trade off of my markup for 6 months ago. You see, I mean, we think it's all different, but really it's all there. And I mark up the time frame that I am trading on. It used to be, again, we've learned a lot of myths and things that a lot of traders have taught us because they said it sounded fancy, it looks good. Like, okay, well, first mark up from the daily, then go down to the 4, then go down to the 15, then go down, right? And I used to think about that. Well, what if I never trade on the daily? Why do I need to mark up the daily?
Right.
What if I don't ever trade on the 4 hours? So why am I looking at the 4 hour? I trade maybe off the 15 minutes. So this is my work table. So think of it like your job. This is my work table. I'm going to set up my work table because this is where I spend all my time on my work. If I'm on a 15-minute chart, I'm marking on my 15-minute chart. I'm entering on a 15-minute. I'm exiting on a 15-minute. This is where I make my money. I'm only going for 15 to 20 pips. I don't need to be on a daily chart. If I'm trading for 100 to 200 to 1,000 pips and I'm a daily trader, I'm just going to mark up my daily chart. These are some of the, and again, I know I'm breaking some things here, but this is stuff that I've tried over and over and over again. I kept bumping my head against the wall, bumping my head. And I said, how can I be more efficient and how can I be more consistent? And I found that a lot of stuff was unnecessary. It worked for other people, but they overdid it. And that's what the problem is trading can be very quick for you to run down a rabbit hole with tons of data points, but you're only using 2% or 3% of all those data points to make a quick decision to jump in the market. And I said, you know what? I'm doing away with all those extras and just give me the essential. And when you give me the essential, everything becomes so much more simpler.
That always makes so much sense to me. And what I would encourage anybody, if you've been here for a short period of time, give yourself time to learn that idea that all of this stuff, you got to find out what best works for you. Once you find what works for you with time frame, what is the information that I need that's going to allow me to make the decision to actually enter this trade and not to just do it off of emotion. A lot of what I find in the last 4+ years of us being involved with trading and learning how to invest in these markets is, well, all this information I'm receiving, you know what, forget this. I'm gonna take the shortcut. My emotions will kick in. You alleviate yourself away from the emotions and what you've shown, a lot with the information that you've just shown. Really, you can just break down the pinpoint. If I look at this and I look at this and I know what my time frame is and I know what my 2 pairs are, well, these are my strategies for it. My 2 strategies that I utilize. Well, I'm going to be able to make a reasonable decision that this is going to be a more likelihood it's going to be a more successful trade. Now, yes, it may go a different way, but if I stick to these things, optimize of success is going to be great. I was thinking about people who play the lottery. I'm not saying that we were playing the lottery here, but some of the people, some of the strategies of the people that do win the lottery, they actually play the same numbers over and over again. They may have done it for the past 10 plus years, but you know, and they'll only get a certain amount of tickets. They stick to a strategy until it eventually, you know, I'm not saying that you don't just pick your strategy, but what I'm saying is the majority of the people that have won, they stuck to a strategy over a certain period of time, and they've been success. They found success in that. So it's the same same idea, same process here. Find a strategy, stick around long enough to find that strategy, and you'll find wonders in it. You've been doing it all your life, riding a bike, love, relationships, working. You know, you find a strategy that best works. Your supervisor might have told you to do it this particular way, but you might have found something a little bit more efficient and effective. And there's many rewards for those who find the efficiency and effectiveness. So thank you again, Shawn.
Not a problem, man. Thank you, Dre. I appreciate it. And so you said key thing, and then I'm gonna throw this bonus in here in a second. So the reason that I was able to take these steps and put it that way is because I want each of these pieces of data that you're looking at to eliminate a lot of the fear and risk that's involved. If you look at the currency strength meter, you automatically can get confidence in, I know I'm in a certain trend. Okay, great. If I look at the news, I now know that there's not going to be anything that will add volatility to my trade to knock my trade off of what I think it's going to do. Okay. And then the structure is going to give me the box in which I can now start identifying my entry and my exit points. So now the only thing, and like Betsy had asked, well, you already know what your exit is. Your exit is either 10 pips, 15 pips, 20 pips, or 30, whatever your goal is, or your second is structure. You got to respect structure. So it's either going to be right before structure and you do that. So now I don't have to think about the exit. The only thing now that you guys have to think about is entry and start getting better at your entry. And that's just, you already now know it has to be somewhere around structure, leaving or breaking through a structure, and then looking for that retest of the structure and then going in a buy or sell. That's it. And if you repeat that over and over, you'll become way more efficient. You'll start looking at things quicker and you'll start getting it together. And I promise you, it does become easier because I was searching and banging my head to say this got to be easier than what all these people are throwing at me. But it's great to get all the knowledge because now you wouldn't know what simple is if you didn't have all that info, right? Because you can know too little, but it's okay as long as you are consistently winning. All right, so here's the bonus for everybody who's on, and I appreciate it. And again, the last thing is the reason why, especially on Bread Talkers, why I wanted to speak to you guys is because I understood that if you're not really confident in your trading, or you're not feeling like you're getting the results that you've been looking for, I mean, why would you feel confident in telling somebody? I mean, this is real talk now. You know, Dre knows me. I'm gonna be real talk. You don't feel good when you haven't made $200-300 in a day or made $1,000 when people because you know people go, well, how you been doing? You know, oh, I'm all right. The education is great and stuff. But trust me, when you start talking about, yeah, man, I used to work that part-time job. I don't do that no more. And hey, all my bills are paid. I'm doing it. And see, we understand as people, we're looking and we're trying to find real evidence. And so I really want you to say, okay, this is my time. This is my time to now give me some hard evidence so my belief level goes up. So then I can't help but tell somebody about it. Okay. And, you know, the reason why my brother Jim on here is so impressive to me, man, look, he's been studying and doing this stuff for 20 years. Okay. Now I know Dre said 20 years. Now 20 years I've been in management and all that, but no, I've been trading only for 7 years. Okay. But Jim has legitimately been trading and searching for 20 years. And he's still on that hunt to say, you know what? I still can learn more. I still can take it to, I still have a financial goal I really want to get to. And so I'm just hoping that I can add to that. So here's what I'm going to do for the bonus part. You guys tell me what pairs, I don't care what it is. I mean, I don't have options on here. or stocks. But if it's gold, if it's silver, oil, whatever, I'm going to mark the chart. I want you guys to take a snapshot of it. Nas, okay, great. We'll look at Nas 100. We'll look at that. We'll look at all those, and I'm gonna mark it up. And then this is it. You guys want to know, how can I make $5,000? How can I make $10,000? Well, I'm gonna start marking the charts, and you guys can start looking at it, and then you can start making your determinations on when you want to enter. Sounds good?
Sounds good.
Let's get Nas up here. All right.
I love it. I love it. I love it.
And any questions for the new people? Because any new person have a question for him? Because I know it was a lot of us that been here, but is there any new person that's on this call that have a question, or even like just anything, just, you know, ask your question? I would love to hear from you.
Shawn, while you're marking up the chart, so you're saying you're trading off of like the 15-minute chart. Do you use like a smaller time frame to maybe get like confirmation to enter? Or are you entering, like, you know, obviously a 15-minute candle is going to take a lot longer to close for confirmation, or is it just like it breaks the price? You know, if you're going short, it breaks the prior low, and you enter, or what do you use for confirmation?
Yeah, you definitely can do that. And I'm going to show you a couple things that you can do. We can use Hakanashi candles. That's definitely a good part. Yes, you can use exactly the strategy that you're doing if that works for you. Go into a lesser time frame so you can enter. I don't necessarily do that anymore. I just kind of see the 15-minute candle that I like, and if I see one or two, it depends, because a lot of it depends on when I see the chart. I honestly just have to say, after doing it so much and knowing my two pairs that I like, I really don't have to wait for a confirmation candle. That's me. But for you, you definitely want to use that if that's what you're doing. Okay. And I'll demonstrate that here for some people. Okay. So this is NAS 100 right here. I'm on a 1 hour. Okay. The reason I'm on a 1 hour is because it's going to give you time to see the trend a little bigger and to help you if you don't get in until, you know, the morning time. Okay. Which obviously it's going to run, you know, better on the New York session. All right. So I'm going to mark this up. Like I said, we move to a line. You see how that is. This is how long it really takes me to do. I'm doing everything live right now. I don't like that color. Purple's my favorite, but I don't like that. Let's do orange. Okay. Actually, let me thin it out to 2 points.
I have a question. So now, as you're marking up, are you marking up like 10, 15, 20 pips, or are you marking up your support and your resistance?
Support, resistance. That's what I need to know first. I think of it as I need to have my box set up first. I need to know, hey, well, where can I enter? That's what these lines do. It's not about the 10, 15 pips, because you determine that at any time. You might decide I only want to do 7. I might want to do whatever. This is just to tell me, well, what's happening in the market? Where are we? Okay, that's it. That's it. So now you guys can see, right? By a line and all that, I'm not even gonna say anything. What do you feel you guys would do?
I do that as well. I look for my support and my resistance first. I block off a zone, and then I look from the zone to see what direction the candle is going in the most current zone, if that makes sense.
All right, so let's move to the most current zone. We're here. Okay. Okay. Now we'll switch it back to candles. Okay.
It looks to have retested that area, and it's bouncing off of it, or it's rejected.
We got some high wicks on the top too.
Mm-hmm.
Let's go to some Hakanashi candles. What's Hakanashi?
Sell momentum. Well, yeah.
Yeah. Are you guys familiar with that?
No, I was just about to ask you, Mr. Break down what is it called? Hapanachi?
Hakanashi.
Hakanashi.
Jim, are you familiar with this? With these
No.
candles? Can you
No,
give us
not
a
at
little
all.
breakdown?
I'm not familiar with these types of
You're not?
candles.
Okay. So yeah, so just like Hatir said, these are momentum price based. So what happens is once price goes down to it opens and it closes under a certain level, it's going to start another candle if it's under that certain pip. So let's say we're at like this is 13,932. It goes down 13,924. So then if it falls another pip or two under that price, it'll create this new candle. And as it keeps falling under that closing price, it creates another candle. And what happens is if it's flat where it doesn't have a wick on top, it's basically it's kind of gaining momentum that way. It's kind of showing that, hey, it's getting strong this way. So this is kind of like a candle mixed in with the strength meter together. The more candles with no wicks on the top when it's coming down shows that it's in a stronger momentum going down. If it's up like this as a buy and there's no wicks on the bottom, you see how you have these three strong candles like that? And look at that. So a lot of it could be where we had learned when you start seeing the flat bottom, that's when you want to get in. And then, you know, we would assume that's going to, you know, hopefully continue up that way. Of course, we have a doji candle, a pin top, and those. But if I were to compare this with the strength meter, most likely this would have been, oh, well, it doesn't have a strength meter, but most likely, you know, Nas is in a strong buy. I don't have to worry about too many pullbacks. But obviously, we hit structure. We're starting to see this. I could have entered on this flat bottom here and look at taking it back down. So that's very possible, but let's go back to regular candles. Okay. You know, everyone has a little different, you know, we have this one, of course, retested. Like I said, it came down, pushed up, touched it, come down. It's possible it could retest again and then continue downward. So now this is where we guess. We're like, oh, what do I do? What do I do? Well, I'm assuming we hit structure, it retested. I'm going to look at my 2 to 5%. I'm probably going to put my stop loss up here. Okay. And then I'm looking, you know, this is Nas. So obviously we're doing what points here. So I'm looking for this to come down. So I may just set up some take profits along the way, okay, to grab some of these right here. And maybe if I'm riding this down to here, because maybe that's where I ultimately want to go. Once it hits here, I'm going to move a stop loss here and secure some of that. And then keep going. And then if it breaks that, I'll stop here. I'm going to stop at this one. I'm not going to wait for here. I'm going to wait to see what it does. If it starts to break through and comes to the other side, you see, I'm going to do the same thing again. I'm going to just put more breaks in between and keep doing that. Okay. So, but Shawn, what if it goes the other way? Doesn't matter. I got my stop loss right above structure. Fine. If it goes the other way, that's great. It didn't kill my account. I'm only down 2% or 3%. I'm going to reevaluate. If it breaks, it's going to create a new high. Once it breaks, I'll just reevaluate and I'll probably get in. And then again, I'll just shoot to break this up in pieces. You see, that's the thing is we're trying to throw the ball, but instead I just need you to get a few yards. You know, make $20, $30, make $50, $100 and get out. Wait to see what happens. See if it heads back up. If it were to head back up, guess what? I'll just reverse these right here. I'll make this the first take profit again on the way up. I'll make this one and then structure and I'll reevaluate. And then if it breaks, I go up there. Shawn, you make it sound easy. No, it's just
Yeah, you do.
simplify. It's just, it can only go one or two ways. Which way is it going to go? But yeah, you're going to use that and kind of.
Well, I think, Shawn, it is easy, right? The way you're explaining it, because what's really happening is that the way I'm hearing you explain this is, first of all, you're not saying that analysis will completely remove the risk of losing money.
Absolutely.
Right. So you're not saying that, and that the structure is the decision of why you're getting in, and the outcome isn't up to you.
Mm-hmm.
Right. Because you don't know what I don't know. You said there's like 1 million transactions a minute. There's no way to tell all the other traders in the world why they're putting on longs or shorts.
Mm-hmm.
So there's no way to know that, and analysis can't do it. And that's the beauty of the way you're teaching it, which is I really appreciate, because that's where I think the power lies, in being able to take a trade and not having it mean anything,
Mm-hmm.
right? Because once we start putting a meaning on it, like a winner means I'm a winner, I know it all. As soon as I start thinking I know it all, or I start thinking too much, period, it would be cheaper for me to go down I-75 and throw $20 bills out my car window.
Right.
Because once I start thinking, so I really appreciate the way you're teaching this, and just really using structure. And the other thing that you said before, like you'd want to take profit before it would hit the structure of the bottom line. And it just reminds me that there are millions of people drawing the same lines. Everybody can see where the structure is. So instead of trying to get every little last pip or every little last tick, to the bottom, is you're willing to take it off. And I really believe when you say that you can make $1 million taking 10 pips out of the market, because the scalability is in the number of contracts. Or I don't know if that's what you use in Forex and contracts, but excellent teaching tonight. I really appreciate it.
Well, thank you. Thank you. Yeah, I mean, look at this, guys. This thing, this is probably news, right? Some of the news came out, US news, and it probably pushed that. But the great thing is, if I'm not expecting it, it doesn't matter. If I follow my structure, if I follow every single time, because yeah, you say, oh man, I could have catch this, but I'll be honest, very rare have I ever caught this. Very rare, unless I'm strictly trading news by itself. But other than that, if I had entered and I've set a 15, 20 pip or 20 point, and then I got in thinking, okay, well, it hit structure, seems to be going up. Well, boom, the news hit, and guess what? I just hit that quicker. I don't have to wait 15 minutes. That hit in 2 minutes. You see, that's what happens when you just stick to your system. Let's just say news could hit, and all of a sudden, boom, it has a strong sell, and boom, wow, I just hit it that quick. And I still kind of follow my structure. I could leave this here. Now let's look at the past. Let's say I left this structure. See, let's just say we left that. Let's look back and see how. Now look, this date here, this is May, is it 5th? Yeah, May 5th. See, still respecting structure. Go back more. Look at that. This is April 23rd. Still respecting structure. Let's go back farther. Look at that. Okay, still within these boundaries here. Okay, consolidated a little bit here, but look, still it got stuck around here. Okay, it was lower. Put some more structure in there. Let's see. Let's do there. What I want you to see is that the market is always going to kind of stay in these areas. You see? Look at that. See? Higher. See how it's respecting these areas? Look, this is February. It just, here it was lower. Let's just say I added some way low down here. I mean, I could probably keep this for the rest of the year. Sounds crazy, right? But look, we're in November of last year.
Wow.
Look at that. See, respecting structure. See, so it's going from floor to floor to floor. It's just your patience. It's just your patience. I could have hit down here and say, man, I'm stuck here. And let's say I entered a buy here and I just didn't touch it. I didn't touch it for 3 months. I entered here. Let's put a star or something here. And I'm sorry, I mean to stretch this out. I just want to kind of display. Where's my symbol?
It's true what they say, Shawn. If your past does affect your future. Know your past.
Look at you. Look at you dropping it. Sir. Man, where are my symbols at? I'm trying to, oh, I gotta be here. Man, it's been a minute. Let's just do a circle. Oh.
Immense value. Immense value.
Okay. I'm sorry. I'm looking for image. Nope, don't want that. Where's all the little stars? And I'm missing all my little shapes I used to have. I guess they don't have them here. All right, there you go. Well, I'll just pick something. Let's say I picked there. So we entered here and we were just going on a buy, and I just left it. I just ignored it, forgot it was on my MT4. I forgot I put this trade in. And look at this. Look where your account could have been. Just riding structure up. You see? I mean, this right here from way over here. Now, let's see. We're talking about January of 23. That was beginning of this year. So if you watch, if you were to look, again, this is where the homework comes in. This is where studying the market. If this is where you want your bread and butter, this is where you want to make 5, 10 million, 20 million, $100 million, then you'll understand this. Out of 7 years, I know me, Dre, Shareem, and everybody else, Satira, we all been in the market for a while. It's historically known that from October to December, what's happening to the market? Anybody?
It's slow.
It's slow, right? It's declining. Everybody's going on vacation. The market. So what happens from January on when everybody comes back?
Picks up.
Yeah,
My goodness. So this is known. So I don't care which pairs that you pretty much, most of all the pairs have done this. Started low at the beginning of the year, and guess what?
Picked up.
So next year, guess what you can almost expect to happen?
Look at the scans. Look at the.
You know what? I don't believe you, Shawn. It's okay. You don't have to. I don't have to. Let's go. It's January there, right? Okay, let's go back to this year. Let's go back to the beginning of 2022. Let's see where we were. Okay, let's go. Let's go. Oh, we're back, right? I just want you to see that human behavior follows itself. Okay, that's April. We're February. Let's see, we're January now. Where are we? January 10th, 5th to 3rd. Okay, so 3rd. Does it even? Let's put a mark there. Where we at?
Look at that. Look at that. Look at that.
Did it do opposite? Let's see.
Mm-hmm.
Yeah. So it did a converse there. Started high, went low for this year. Oops, that. Dip down in the summertime, right? Oh, dip down even lower. Oops. All right, so then we're there. I'm curious, what did 2021 look like? We're in the midst of a pandemic then, right?
Yep.
Yeah.
Will it go farther? Let me see. It may not. Oh, trading view. But I could almost assume that this reversed back then and just continue. So it's just patterns. Just patterns, guys. This thing is going to hit a high during summer. And after the summer, it's probably going to head back down again. Could do a higher high. I doubt it though, because where's the highest that we've been on NAS? Let's see. Okay, so highest. All right. Okay, so highest seem to be right here. So it's possible. It could go higher. Let's make that a special color. Do go blue. Okay. All right. See how far from the blue. And I'm sorry, I didn't mean to stick on NAS. I know there's a lot of you guys as NAS traders. Right here. Okay. All right. So it's very possible that this could go higher for the year. We'll see if it starts to break structure, continue going higher. We know so far, historically, this is probably as high as it'll be. But once it gets here, see, this is for traders, this is what's great, is once it gets high, the highest altitude, where else can it go after that?
Back down.
Back down.
Crazy.
And then you could sit in it for next year in 24, maybe. And become a millionaire at the end of the year if you have a nice size account and you're patient and you just sit there at the smallest, pick the smallest lot size on NAS that you can do and have a good account and just ride it. There's all kind of things that can happen in the market. You just have to understand these patterns.
Wow.
Okay, I asked you this question before. Because right now I'm at the lowest lot size. When how can I answer this? When should you feel like it's okay to up your lot size?
What is that, Dre? I think it used to be early on. It used to be like, if you're doing Forex, it used to be 1 cent for every 1,000.
You can go up, yeah, 1
But
cent.
you can go, but I tend to go
1,000 with it depends on if you're in Forex, if you're doing metals, if you're doing
I'm in colors.
Say again.
I'm doing colors.
Well, colors is just a strategy, type of strategy.
Okay.
What we're talking about is
should you up your lot size?
The currency.
Okay.
Whatever currency you're doing. If you're doing Forex currencies, if you're doing indices, stocks, or anything like that, if you're doing things, it's different. So it depends on what you're
trading.
What you're pairing up or what you're trading.
Okay.
Mm-hmm.
Right.
I think,
but there are. We do have. I do have one. What is it? A trading plan. You want a trading plan?
Yeah.
We do have several trading plans that are available with our platform. So I can.
What is your platform?
Same like yours. Because you're on Shawn team.
You're on Shawn team. It's I am.
Okay.
I am. So we do have trading plans
and it tells you
stuff
when
like
to
that.
Yeah,
if you're doing Forex pairs, especially, the trading plan that we have, it'll show you like, listen, if you trade this amount of money, you're starting off your trading account at this particular area. Well, this is what it looks like from anywhere from 1 to a 60-day time period. It's not saying you trade. Of course, we don't trade every day. I wouldn't recommend trading every day. It's
up to you.
It really is up to you, but you keep your hand in the frying pan long enough, you're gonna get burned. You're gonna blow that account. But so you trade respectfully and responsibly, and once you meet your mark, however much you decide to make, how much pips you plan to get for that day, you quit, you stop, and that'll allow you to know how much pips should I move up accordingly.
Okay.
And anyway, if you can't move up, it won't let you in the trade either way.
Right.
If you don't have enough money in there, it's not going to let you in the trade.
Right. You know,
Oh, okay.
you don't want to be greedy. Don't. Bottom line of everything we've learned or we covered today, don't be greedy.
Okay. Yeah, I hear that all the time.
Yeah.
I think Shawn hit it on the nose, you know, just worrying about the accuracy of the structure, and then just worrying about at least getting 10 pips. You still win either way. And so, I mean, we talked about atomic habits, but the fastest person in this race does not win, because sometimes they lose because they're trying to be so fast. But if you organize it, take those 10 pips and get out.
Yeah. Whatever your pip count is.
The
You said
probability.
more than 40 if you're doing.
That's what you said, right, Shawn?
Yeah.
Probability is just greater.
Do gold. I know they got some gold traders here. Let me see.
In due season, you'll definitely reap the reward or
Listen,
see the reward.
indices will make you greedy. Indices will make you greedy. Oh man, US 30 and NAS and SPX of the 500. Lord have mercy.
But I mean, again, if you get those 10 pips with that, you're doing good.
Well, you say anywhere between 10 and 40.
Yeah. As he said for beginners, right? We're talking to beginners. So 10 pips is good, right, Shawn?
Yep. Yeah. Well, yeah.
10 pips.
No
and
more
then-
than 20. Yeah. 10 pips, 20. I try to keep it, right at 20. 20 is pretty good at the
Mhm.
most.
Hey, I say start with 10 and work your way up to 20.
Okay. We're looking at gold. Gold moves pretty quick.
Gold.
I'm gonna trade that on the New York session. I might add a little structure right there. Okay. All right. So looks like gold's headed downward.
Hey, everybody, if you're finding immense value in this, in the chat, just go ahead and put some fire emojis in there. Go put some fire emojis. If you can't put fire emojis, go ahead and put a number 7 in the chat. 7 in the chat. Let us know you're still there. You're watching. You're really getting something out of this. We want to know that this is actually bringing some value, right? This is an opportunity. Hey, look, we may have another one of these types of calls where you may want to be able to have the opportunity to invite somebody to this. So if you're actually getting value from this, put some 7s, put some fire emojis in the chat. Go ahead and light it up. Listen, I want everybody to wake up, right? This is incredible information. I appreciate Shawn for taking the time out on a night where he's a family man, right? He's a family man. There's some things other things that he could be doing right now, but taking the time out to give this valuable information. Listen, don't take it for granted, right? We don't want to take it for granted. We want to know that this is of value. Thank you.
And I appreciate it. I love it. I love it. I just love people that wanna learn. Okay, let's go ahead and look at this gold. Gold looks like it's dropping. If it comes back to retest, we can look at it possibly to continue to drop. In regards to that, we'll go ahead and compare that to the US dollar here in a second. So we'll look at the US dollar index. But the dollar index is still climbing, and you can look at gold still dropping. So mark this down, take a shot. You guys want to get in gold. That's what we're looking at. It had been hanging out here for a little bit, but it looks like it is continuously to drop. That is gold if you're a gold trader.
Shawn, you said you was gonna let us take a picture.
Oh, I'm sorry. Yeah, I thought you took it. My bad. I got you.
No,
Queen.
I didn't know you was going. It's all right. I could do it with gold.
Yeah, there you go. You got it. I'll leave it right there.
Actually, it's on my
Screenshot, baby.
yeah, I'm just screenshot. Sorry.
Of course, you guys got the recording, so.
Yeah, that too.
Absolutely.
Was it DXY? I think that was a DXY, right?
For the US dollar? Yeah.
Yeah.
DXY.
Been a minute. Oops. There you go. There you go. See, See how that inverse happened? US dollar.
Sean, if you split your screen, you can look at both of them side by side.
Thank you. Let's see. Ooh, okay. I might do that one.
Yeah, move that little box out of the way, right where it says unnamed,
Uh-huh.
and that little square next to it, and then click 2 side by. Yep.
You're on it. Man, that's my sister
Wow.
right there. Oh, I got the pro. I need the pro version to do it.
Okay.
I guess so. Yeah. current
That's
plan.
good to know, though. That's good
If you want me
know.
to share my screen, I can show you because I was looking at that today.
Yes, ma'am.
That's awesome. We appreciate you.
Oh, no problemos.
Where you go?
Yeah, teamwork does make the dream work, Sean.
You got it? Okay, good. All right.
Oh, she got that wolf rush.
That's new, Sean. That wolf brush is new.
I like it. I like it.
I like
So,
it.
right here in the middle is your gold, and right here on the right side is our US dollar. And you can see, I'm looking at the 5-minute. I can switch it to the 1 hour for us.
Or 30 or 15, whatever.
Okay. And we can see that inverse relationship going
There you
on.
go.
Oh, that's so good.
So that's another tip. If you haven't paid attention to the DXY, mark that down. Obviously, that is the US dollar index. There's so many things that are based off of that. The NAS, gold, a lot of those US 30 moves either with or against that. And that's just another great confirmation for you when you're trading.
So yeah, pretty nice to see that normally they have that inverse relationship.
Oh, I'm gonna get that.
Okie dokie.
Nice. I didn't know they had that. 4 years being here.
Oh,
I did not
look,
know they
listen,
had that
they
feature.
have, it's a really cool feature. Especially if you're one of those people who likes to trade and you want to see the 1 minute and the 3 minute and the 5 and the 15, you know, people like to do all that. It allow you up to 8 windows, but that just gets a bit much. At the most, I've tried 4. So yeah, and then you can put whatever indicators, like you said, Hakanashi candles. I like to do, I'll add my Hakanashi candles, and you can put them underneath. So we can move Hakanashi to a new pane below. And so then you're able to see that momentum in conjunction with your chart. So
We got it, guys.
yeah.
So to my sister here, Satira, you know, I got to meet her, guys, because we have been on a developmental research team to help develop some, what would we say, Satira, some AI trading software.
Oh, wow.
So we've kind of been on the research team trying to take, you know, our experience and kind of test and do some stuff to roll out to market. So it's been an honor to be able to work side by side with her. And
likewise,
I'm just honored she was on tonight and stuff to kind of so
I feel blessed.
Awesome. I appreciate this opportunity to jump on and get some nuggets and kind of confirm some stuff that Sean has already shared with me. Awesome sauce.
Any other pair, something else we want to look at? We looked at gold. NAS, if you weren't clear on that, NAS, you can probably look at as that dropping with gold also. Remember, we are at the end of the week, so I wouldn't necessarily recommend getting in on a Friday.
Right.
Probably look at Monday and kind of reconfirm what we just saw, if it'll retest that area and then continue to drop. But as that US index is going up, I would almost suspect that NAS and gold are going to continue to drop.
Someone that Sean's Damien, 4th grade, had put in BTC earlier.
Okay, BTC.
I know he's a DCX guy.
All right, let's look. It's the US dollar. All right. Get to work. Let's see. Oh man, I had this marked up some time ago. Looks like. Man, this is over. Man, this is almost a year ago. I probably marked up that.
Oh, wow.
That. That's another thing I like about it. Okay, so let's look at that. I need to shrink it up, kind of see where we are. Like I said, let's go back to a line. Let's see. So you kind of, I can already see it's already kind of been in this area. So, I haven't looked at BTC in months now. So it looks like it's in a boxed area here. Where are we at? 26,000. Man, when I last looked at this, guys, it was probably, I think we were probably at 40. How long ago I looked at this? All right, so working in stages. I'm not Kurt Cobain here, so don't look for Kurt Cobain stuff now. I'm just okay. All right, so
You're good though.
I try to do a little.
Cash App.
Oh, you got me too. Oh my God.
Crop failure.
Okay, can't shrink anymore. So,
No, that's good.
all right. So obviously you see we're in this box here. And the great, the thing that I've understood just watching BTC, I'm not a BTC trader as much as more so I'm an investor. So I like to invest in it, but watching it now, we're the thing about BTC is it moves like this, where it's in a structured box of running like that. So you see it kind of was in this box, it ranged up here. This was kind of, let me see, this is March time frame. Now we bounced up here. Hard to make a forecast, but I would say it's probably going to stay in this structure here for a little while longer. Is it going to go higher? We all are hoping. I think we're hoping that it'll break out of this and head upwards. I would pay attention to it, that it hit this and will continue. But I would look at this, that it would probably create another erase that boxed area. I would say somewhere here and hang there. I'd say somewhere between this 30,000. I wouldn't say more than 35. And a lot of that's going to determine what President Biden is going to say with, crypto and, with these policies that's going on. That's kind of why it's hung here. Okay, because when March came, if you notice, they started, that's the kind of FTX time, and people started seeing, what's happening, and law started to come in as far as wanting to regulate. So we're in this realm now of trying to determine what the Biden administration wants to do with Bitcoin and the other currencies here. So I see it may make a jump and go there. If not there, then it's very possible it may just be here. But I don't see a major drop. I may see it matching this, coming back to a range like this. And that's just my little opinion watching. I can't say, again, that's the thing about it. You really don't have a whole lot to compare it to. So you kind of just have to take it. And we're still in uncharted waters, even though Bitcoin has been around for such a while, as the granddaddy of everything. It's regulation now that's driving it with that. It's banks that are now dabbling with it and accepting it more and more as payment. They want to stabilize it.
Mm-hmm.
Understand that. They for us as investors, the volatility is a great thing. For trading, for buying things, they need it to be stable, more stabler. So that's what I believe you're going to see over the next couple of years, is them trying to put some sort of reign of stability here. Because let's say, for instance, you don't want to buy a Mercedes where Bitcoin was down here at 20, and then you bought the Mercedes, and then next thing you know, it shot up, and you're like, man, I spent or having it drop. A lot of these products and services want it stable at some.
Yeah. That's understandable.
So that's what they're kind of looking at. They want to be able to use it and to replace, dollars, but it has to be a lot more stable. It's still too volatile to basically say, hey, it's going to do that. So we're at the new election time. As we start getting closer to the second half of the year, that's where you'll pay attention to Bitcoin kind of making a move as we get to this last and before the election. And I would even say, as an investor, you'll want to wait until the election to put any significant amount of money back in, is my thing. I don't know what Curtis is saying. I haven't heard or spoke to him in a minute, but whatever Curtis Cobain is saying, go with it. Go with it, because he is way more versed on this on a regular basis than I am. But that's just my take of looking at the market. What else we got? Anything else? What else we want to look at? Let me look at the chat. Anything? Anybody got another pair? Anybody? Nope, we good. Look at NAS. We look at the anybody US 30 fan?
Absolutely.
Okay. Well, why you ain't shot it out, bro?
I just want to give everybody a chance. I want to spread the love.
Yeah, we grateful for all you've done. I didn't want to stretch it even longer.
Oh yeah, I'm sorry, y'all. I'm excited. I got my brother and sister on. I got all.
Yeah, I'm excited
That's-
too. But I want to make sure I
wanted to highlight that as you're divulging this information and as you're going along and carrying it along, I can't help but notice the joy and energy in your face and the tonality as you go along. I see a youthful vibrance of.
I mean, whatever.
So let me lay it on thick. But it's true. I see your energy is up, man. I see you're glowing right now.
I love it. I do.
Element right now.
Well, he's getting ready to build an AI system that people can invest in.
Oh, absolutely. That's part of it. But he loves teaching.
I love that.
He loves this.
I love teaching when I want to, not when
Right.
That part. Let me put an exclaimer in there.
Right.
I didn't know anybody made you, Shawn.
No, they don't. But
Oh.
people say, why don't you become an educator? No.
Right. I don't think that's for everybody either.
No, they don't mind sharpening a sword every now and then.
Okay. All right, we're doing this year 30.
Oh, that's good.
Okay.
It's nice. Yes.
All right. So definitely similar to NAS. And they move pretty much very close to each other too.
We
Right.
trade US 30 every day.
No,
Mm-hmm.
not every day.
I'm talking about the team.
Oh,
Like we don't take the trade every day, but we get
opportunity to trade.
yeah, we get opportunity to mark it up every day.
Yeah, I will say looking forward to retest more in let's move that. Trying to move this. There you go. To be in this area to retest a little bit in this channel here. And if it doesn't break back above here, then obviously like NAS, you can follow NAS and see. But again, I think dollar still going up, I still think this may head down for you. Let's look at it a little closer. Like Jim said, oh, let's get on a smaller time frame. How does that look? What are we on now? Let me move this out of the way. So I'm on an hour because it gives me a bigger look, but let's go down to a 5 minute. Okay. See, this is what I mean about data points. You know, we kind of seeing a pattern going on.
I got a quick question, Shawn. What news would you recommend or do you know of for indices? Because I know we got Forex Factory.
Mhm.
It was on
And we
there.
have currency strength meter.
You know, that's a good one. I've never really, because I'm not a big indices trader, I haven't really followed that too much. You know, so I don't
Look
know.
like the
I'm gonna have
back.
to look at that. Did I mark this? I didn't mark this, did I?
That
Just
looked like
Oh yeah, I did on a bigger time. I'm sorry. Yes.
just from my experience, every morning when news comes out, normally I'm on Central Standard Time, so a lot of news comes at about 7:30 Central. And whenever we have those red folders, the Fed speaking, PMIs, all that kind of stuff, NAS and US 30 highly react to those. But I've not found, like what you said, something that would tell us exactly like the Forex market. But absolutely, those red folders, yeah, they move NAS and US 30 significantly.
That's good to know. That's good.
Yeah, most definitely. Like, to be truthful, if I'm not trading a news strategy, I will not trade NAS and US 30 during those red folders.
It's good discipline.
Hmm.
That's good discipline.
Oh, yeah, it's hard. It's very exciting to watch, and it's hard to stay out. I promise you it's hard to stay out, but my goodness, I have learned my lesson.
Yeah, that'll do it.
Right?
Learn lessons is the good teacher.
Most definitely. But yeah, for sure, if you can around, I don't know what time zone you're on, but just kind of, if you're up that early when news comes out for those red folders, just pay attention to NAS and US 30.
Okay.
Okay, this is what I was looking for. We're in this, this little boxed area of structure. Looking for it to come out of here, hopefully, and break down. See, 15. See, there we go. So let me get rid of this box. Yeah, so I definitely want to see, you know, this breaking out, maybe see if it retests this area. That's a 15-minute, and you know, comes out of here, breaks out of the bottom of this box somewhere. I would look at it to, you know, continue downward. But like I said, following what NAS and all those do, they all, you know, they're similar.
Mhm.
So I kind of look at those and kind of see what's happening. See if it'll continue. I'd like to see it under this level before I were to make a move. You know, see it come under here. That would be good for me. Playing it safe. That's on a 15-minute. I'm here, you know, 5-minute. If I see it come under this level, I would probably look at it to continue further down. That's what I look for on US 30. Satir, anything? Anybody else? Not just me.
Nah, looks good.
I know you're like, look at all the lines. Why y'all got all these lines? But see, that's why, guys, I don't do a lot of, vertical, well, like, slanted lines on it. I like to see the candles kind of do it. And that's what I'm saying. By this time, I'm just so trained to see the trends, and you see it. See, when you see lines go across and you see it break, that you obviously know it's going from one level to another. But they definitely help if that's what you want to do as an added bonus. Do what works for you. Do what works for you. Again, I try to keep it as simple as I can. Like, what's the bare minimum that I can get away with for it to make sense to me? This is what works for me.
All right.
This works for me. The reason I made this box is because I saw it going up and down, and it's really staying kind of in this area. So that's defining its own box. Is defining it. So now I just put this low here and say, okay, well, what is good for me? What is the entry? Because it could stay going up and down. Maybe because I have so much space, that's why I can make that box. Because again, we're not trying to, get rich off of one giant move. We got all the way down here before it hits a major structure. I just needed to leave up here. Now if I decide I want to go on a 1 minute, 3 minute, 5 minute, just get short points or pips in here, that's fine. But this is the move I'm looking for. I'm looking for it to get away from this area and break under this low here. Make that bigger. I wanted to go lower than this lowest point has already made, because it looked like it was faking us out, like, oh, it's coming down here, and then it didn't. So now it reestablished. We have a double bottom. See, came up, came down, came up, double bottom there, double top here, right? So
don't be greedy.
So now it's like, okay, I want to see her come down and not just retest, because it could bounce here, and that's okay. Guess what? If it comes down here and it does another double bottom or something, hey, I could make some points up here. I can definitely ride this. See, and that's what I'm saying. There's never an opportunity that's not in front of you. It's just a matter of how you look at it, how you see the market, and what you want to do. Me, yeah, I like a bigger move, and I like to be on a little bigger time frame. Maybe a 15-minute is good for me. So, because it bounced here, I feel like it's playing with me. So I'd rather see it break here. Like, you know what? I don't want you to play with me, and let it break here so I know it's dropping. I'll feel better. That's me. If it breaks up here, I'll feel good climbing up here.
Right.
I go, like Jim said, I set myself up to see what the market gives me, and I will go from there. I could put, even if I want to, let's say I'll say, I don't know, Shawn, I don't know what I want to do. Okay, cool. Let me put a pending order up here. Let's make that blues. And fine. Let me put a pending order down here. How about that? How about that?
Yeah, that's good too.
That's good.
Right? Isn't that something?
I
So
mean,
now
because you're not going to
catch.
take it until then anyway.
That's right.
Yeah, I'm not losing anything by doing that.
Now you don't have to watch it though.
Don't have to watch it, right? If it breaks down here and it goes with my theory, maybe it's just a little theory. It doesn't matter.
And you can save it, and you can get a little alert to your phone. So once it does break,
Yeah,
Mhm.
it alerts you and stuff.
you can change your stop loss.
Yeah, I don't have to watch it. And just, it breaks down here. I'll say, great. Okay, wow, I've caught it. Okay, I'm
Wanna
catching
ask-
the fish net. And
Wanna
then I
ask-
put a stop loss above here.
Oh,
Right.
okay.
I just replaced this pending order with a stop loss
Right.
and put it above structure. And again, guys, if you're doing colors,
Depending on
it's the
whichever
same
one.
thing.
Mm-hmm.
Colors is exactly the same thing. If let's just change. If I was doing colors, and for those of you who are new, colors is just a strategy software that we have within IM Master Academy. Okay, cool. I got colors going on now, right?
Absolutely.
All right, so that's my red zone. That's my green zone. If it leaves up here, I'll do a cell coming down. If it goes up here, that's it. That's colors.
Right.
This would just be a block what they say, the auto block. So once it breaks through the auto block, okay, and then I could catch it and go there. Pending orders. Pending orders. You can use pending orders. Saves a lot of time and stress and don't have to watch the chart.
Yeah, that's what we do each morning.
Okay.
Does anybody have any questions? Anybody?
Yeah, I'm sorry. You know,
questions.
No, I'm good.
Anybody? Are y'all still here with us? Go ahead and unmute.
Still here.
No, I know Bessie there. I know Sarah's there. I know Ron is there because he made sure we know Ron is there. Ron been on.
Yeah, that's
I'm
Davis
here.
right there. He hanging with us, man. I love to see the
riding,
doctor on.
riding. I love it.
Yes, sir. Yes, sir. I'm just taking all the info in. Absolutely. I appreciate it, though.
Cool.
I'm
Everybody.
still here. I'm still here. I'm just taking it all.
Question.
All right, good. I just like to know, I see people commenting in and out. Sometimes it's just good to hear your voice.
That's
Yeah.
right.
Hear your voice. And this has just definitely been an immense opportunity, taking the time out to just give this much information again, Shawn.
Thank you.
Thank you for everybody that's been hanging on and just really taking notes. Note takers are the money makers, action takers are the money makers, right?
You gonna let them talk, man?
No.
Man, it's been an
Listen, we've been-
honor.
we've been
I'm
married for
closing it
22
out
years.
now. Man,
Shawn, quick question.
Yes.
I heard both of you all mention your teams. What teams do you all have? Do you have a team, Shawn? I know you mentioned one before, but I didn't know if you still did it or had it.
Yeah, I still got some folks hanging on. I got Ron hanging on and Betsy hanging on and
But do you all meet regularly or? Sorry.
We
No,
want to.
now I will say now today's this is for my brother and sister, the bread talkers you see in the corner and stuff. So
Okay.
this is definitely for their team. But of course, I invited my brothers and sisters off the team that we've had, Team Wealth Builders too. I just kind of put it
Right.
out there, and so yeah, we haven't actively met in a while, and so that's why seeing my brother Duran and everybody, it's like a reunion for us right now. So
That's awesome.
yeah.
Right.
So
But we're
Bread Talkers, you all have a team or you all meet consistently?
yeah,
Yes.
we're part of Rich University's team with
Okay.
Dr. China Bethley,
Yes. Okay. Gotcha.
and all a part of Jules.
I am. Okay. Got
Yes, I am. You said it right.
it. Hmm.
Are you part of a team?
Yes.
She got the wolf strategy.
I know. I saw the wood strategy.
I know she's a part of it.
I know, but I didn't know whose team she
got
was
the
on.
wolf.
Are you familiar with Babe Savage?
Absolutely.
Yes.
Oh, you're in the family.
Okay. Yeah.
Absolutely.
I'm
I got them on my phone. I was just on one of their calls the other day.
Okay.
Tell Babe the bread talker said ha.
No, we can tell them.
I sure will. Look, I
Yes.
will confirm it.
I definitely love them.
All right there.
Yeah.
Bread Talkers is involved with everybody. We don't close doors, okay? We don't
Yeah.
discriminate. We love on everybody because we believe everybody have value. So yeah,
Awesome.
that's what we're about. We're about value. That's it. Giving it and receiving it.
Mm-hmm.
Small world. Lovely, lovely.
all right, Mr. and Mrs. It's on you now. Hey.
Listen, it's a pleasure. It's been
Oh my
a
God.
tremendous pleasure. This video will be available. We're gonna upload it tomorrow. We're gonna upload it tomorrow. But listen, we covered a lot of ground today. We've been on actually since 7 p.m. We did our
Yes.
team huddle. We covered some stuff about the atomic habits, and we covered a lot of information in there. Yes, we did some team building, and then we lunge right into this particular
This
meeting
was
that we're
amazing.
having right now. This has been a tremendous day, well worth it. We got a family too, but our kids understand that they understand, like Shawn's family understand. We understand that the value that we got to bring to the people, to the masses, it's incredibly important. This platform that I Am Mastery Academy has brought for all of us, if you've been around, you stuck around long enough, it's really changed our life. And I tell everybody, listen, once you start learning about trading, investing, that's really the small portion that this company offers. What it really offers is something so much more. It offers value to your personality, offers value for your personal development, excuse me, and your professional development along the way. How do you interact? How do you think? How do you feel when you take the trade? We went over some breathing exercises earlier before you begin your day. When you wake up in the morning, when you take your trades, when you get ready to get in or engage with people, how do you breathe? You know,
making sure your energy's right.
Get your vibration right. You don't want to let anybody control or anything control your energy or vibration, because it's going to show in the market. It's going to show in your bottom line at the end of the day. If you let somebody or something, you let the market control you, because like Sarah talked about, man, sometimes I wanted to get into that trade and it just was not part of their strategy. Once we have our strategies, you're least likely to go wrong. Now, there's going to be some bumps along the way. There's going to be some lessons learned along the way, whether it's a win or a loss. Just know that the value is in the lesson, and those lessons don't stop, right? It's not going to take you 6 months. It's not going to take you a year. So this is a life's journey. And with us, when Shareem and I decided to truly become a part of this company, we were all in. We were all in. We knew from that point, listen, the only way for us to stop is if we don't show up. So opportunity calls, we show up. When it's a team huddle call, we show up. If it's a team, somebody on another teams and they offer the invite, we show up. When we go to these events and we meet up, we hug and love, take pictures, exchange numbers, we're showing up. So as much as you show up for your success, there's going to be a value in there's going to be a reward in the long run. But if you quit, I'm sorry to say, you're hurting yourself. If you don't show up, you're out of here. So I want to say thanks, Shawn, for continuously showing up. And it doesn't matter if you fall down. You just got to get back up, make the phone call, find your workout partner, so you can, reap the greater benefits.
And Shawn, I mean, I just cannot thank you enough. I looked at the time and said, Dre, is it really 10:30? We still on the call. Yeah. Hope Shawn ain't gonna kill us. Because I mean, I'm really grateful. I value time. Time is not, you're not gonna get it back. So I'm just really grateful that you gave us so much value in this time. Like, I'm really grateful.
Thank you, family.
I feel like I owe you, Shawn.
Tell your family we said thank you.
Yes, tell your family.
I will. No, we was all hyped too. I was excited. This is the highlight of the week right here. I couldn't wait.
For us too.
Me too. I definitely was. I had an adrenaline rush.
We
As the time came closer to us having this call, I had a serious adrenaline rush, and it's been well worth it. Man.
Yeah,
I hope I delivered.
You definitely delivered. I think you did beyond delivery.
You did it. You did. Quite honestly, I knew you could. I've seen you in action.
Right. This is not our first call with you.
I've seen you. I've seen you in action. It's just good to see it again.
Yes, it feels comfortable.
I appreciate it.
So your team doesn't trade anymore, like at 8 on Monday.
No. Deron and them are all, they all millionaire traders now. They don't need me no more. So they do their thing.
Okay. Well,
I wouldn't say that.
Yeah, he had to unmute for that.
Listen, I'm not.
One day.
I'm not mad if he left you and you have the value and you don't need them, that's a plus. I mean, you want everybody to get to that point.
And Tia, she
I need you.
raising up the Bahamas.
I need him too. I think I need everybody. I think everybody is needed.
I love the community. We just love the community. It isn't about one particular leader or two particular leaders. It's just about the community. Quite honestly, the Iron Mastery Academy offers
priceless.
That's priceless.
Mm-hmm.
That's priceless. whether you're trading or you're investing in crypto markets, or you're simply utilizing the ECX Academy, or you're learning how to brand and promote yourself on social media with SMX.
Man, that
Even
stuff
the
is
mindset
good.
mastery of MMX is just, this company offers so much.
I just like the
value. You
growth.
just got to get in where you fit in. That's all.
Yeah,
If
I
the
like the
product
growth.
works, the system works. All we got to figure out is how to make you work. And Shawn showed us today.
Right.
It works.
It works if we work it.
That's it.
It works. But again, this video, it'll be available on I'm gonna put it up on YouTube, make it available for everybody to be able to touch, feel, review it. Only thing I ask everybody is like it, comment, share it. You know, the more we bring enlighten or bring the light towards what we're sharing or what we're reviewing, it's going to bring more credibility and value to the company in itself. And I know
Shawn to get him back on at 8 o'clock.
All of us.
Just joking, Shawn. I'm joking, Shawn.
No,
Shawn's like, oh no, thank you.
Well, whenever you can make yourself available, and we'll just
your
talk about
students
that
can
too.
teach.
We'll
Yeah.
It don't always
Yeah.
gotta be you. I mean, I don't know if you got on our call, Shawn, but we weren't actually teaching. It was one of our teammates. So I mean, everybody has to take their turn.
Yeah.
And if they're that great, then I mean, they should mind teaching a little bit.
Right.
Shawn's like, what you said?
What you said, yep. Tia.
Hey.
No
problem. Let's get back into the swing of things. So, yeah.
Let's go, Tia.
Let's go.
Get this going. Shawn is laughing.
All right, everybody. Shawn, did you have anything that you might want to close with? I just want to say thank you again. Thank you
everybody for showing up.
Thank you for showing up.
Oh, I'm good.
Everybody.
Just trade. Just do it. Don't hold back. Don't be scared. Just make that goal of getting your 10, 15, and 20 a day, and it'll change your life, period.
Shawn, do you have the trading journal? The team?
I do have one.
Drake can give it to you so you can give it to your team.
Okay.
I'll provide that.
No worries.
I wanted to ask about that because
Well,
I heard that before. Someone talking about a trading journal. What is the purpose of the trade? I know some people say write down your trades. Is that the same thing?
Well, it gives you a vision.
Well, no, she's talking about a trading journal, and then there's a trading plan.
Right.
There's a difference. A trading journal is what you take you find whatever pairs that you like to trade with, and then you write it down, and then what you're doing is you're writing the progress of your ups and downs of you winning. The trading plan is actually showing you, okay, if I start my trading account with this much, this is what my day one trading will look like. We're trading this particular pair, or in day 2, day 3, day 4, day 5, and so forth and so on. What does it look like? What does the compound growth of my money look like when I'm trading a plan, whether it's 5%, 1%, 2%, 12%, whatever, how much ever your percent is, the spreadsheet will show you what does that look like at the end of a 60-day.
It gives you a vision.
And
okay.
And I like the trading journal because it allows you to see the mistakes that you make and the areas of strength that you have. So I know for me, at one point in time, I was often chasing the market. I would see a candle shoot up and I would jump in it, and then it would turn around on me, or I would jump out of a trade too early. When you stop and you journal, what did I trade? What made me get in that trade? What made me get out of that trade? It slows you down and it makes you assess what you're doing, what's working and what's not working.
Oh, absolutely.
That's right. Trade the market is that like you trade a relationship.
Seriously.
It might not work. You got to let it come to you.
That part. But the journaling allows you to see when you're doing that well versus when you're not.
Absolutely.
That's awesome.
Absolutely. Shawn, I'll make sure you get this link so you could disperse it however you like it, definitely everybody on this call, definitely again, like, share, and I look forward to the growth.
And seeing all of you again.
This is a growth. This is going to be a great growth period.
Let's
For all of
go.
us, for all of us.
That's right. We can all grow.
All right. That being said, everybody enjoy the rest of your night. I'm gonna do like one of my old mentors used to say, we're getting ready to go off. Enjoy the rest of your night. I say bye.
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 Do a Dr. Jewel. Bye.
Good night.
Good night.
Good night, everyone.
Night.
Good night.
Good night. Sleep tight. Don't let the crypto bugs bite.
That's right.
Good night.
Good night.
Talk to me.